All right, everything looking good. We are live. Let's go ahead and get this stream started. It is 8 p.m. Eastern Standard Time on 7/6/2022. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and, of course, trade responsibly. Right, so let's go ahead and jump right in. So a couple just topics I want to touch on really quick. Just sort of a quick reality check for what's going on in the markets right now and what we need to pay attention to. There is quite a bit happening in the markets behind the scene right now. And I don't think people have fully grasped exactly what's going on in the traditional markets, let alone in crypto markets. Part of the big appeal, or at least the narrative behind the crypto markets, was that everything was going to be in front of, out in the open, and there to see on the blockchain, and there was going to be all this transparency, and that was going to be better. And the fact of the matter is, the exact opposite has occurred. Whether the fault is regulation or the fault is people taking advantage of the lack of regulation, whatever is the actual fault, we could argue on all day or discuss. But the fact of the matter is, there's no transparency. And what is taking place right now, and if you're not familiar with what's going on, obviously, we're seeing crypto projects fail. We're seeing Ponzi schemes collapse. We're seeing exchanges halting withdrawals, deposits, whatever. We're basically, what's happening right now is we're real time seeing exactly what I said. I talked about this exact event and what was going to happen with all of these, zombie stocks, zombie cryptos, zombie exchanges. We're basically just watching the Ponzi scheme, implode in real time. And now I'm not saying all crypto is a Ponzi scheme, but the majority of it is a Ponzi scheme. The idea that all of these cryptos, exchanges, businesses, etc., are going to create some kind of mythical value and upset the space and take a certain percentage of the market cap, therefore their valuation is in the billions or hundreds of billions. That's like the oldest, marketing scheme campaign forever in the book. I mean, if I told you like, hey, I'm going to start a lemonade stand and, I'm going to start selling lemonade on the side of the road, and then eventually I'm going to branch out and, have lemonade stands in every state. And, we did the math. And if we can just capture 1% of all the beverage drinkers in the entire United States, this company is going to be worth, $10 billion, $1 million, $1 trillion, whatever, just whatever the number is. And the fact of the matter is 99.9% of businesses will go on to never even accomplish some pathetic goal, that they have set out, or marketing or whatever. And the fact of the matter is what's happening right now is reality is starting to set in. But the reason the reality is setting in and what's actually happening with these zombie companies, whether it's in the stock market, in the crypto market, etc., is due to one thing and one thing only. It's due to liquidity. We're currently seeing the Federal Reserve suck liquidity out of the environment, out of the markets. And what that's leading to is insolvency. And this is literally what I was saying months ago, and now we're seeing it play out in real time. And the real scary thing that people aren't actually acknowledging, or maybe they just don't realize, or they don't want to talk about because it doesn't fit their narrative, the fact of the matter is the Fed has literally only just begun sucking out the liquidity, and we're already seeing hundreds of billions of dollars destroyed in value, not only in the crypto market, trillions of dollars in the stock market, in the bond market, due to this little itty bitty tiny little bit of liquidity being sucked out. So we pumped $10 trillion worth of liquidity into the system in like 2 years, and the Fed has literally sucked out like just the first couple little drops. They basically have just put the straw into the liquidity, and it's only just hit their lips as they have begun sucking the liquidity out, and we're already seeing insolvency. And if you're not familiar with, the term insolvency, it's basically just the ability to pay your debt. So suddenly we're seeing a bunch of these exchanges, a bunch of these crypto projects, quite a few stocks so far, including, well-known companies, already having issues paying their debt. And now understand that they've only just sucked out a little bit of liquidity, and then also rates have only just gone up a itty bitty little bit. So if all of a sudden these companies can no longer, maintain business without inflows coming in, it's literally the definition of a Ponzi scheme. I mean, you're using new money to pay out old money. And then the second you don't have enough new money coming in to pay for the old money, your business or, your fugazi, implodes because your illiquidity turned into insolvency. So while people are sitting here saying, oh, 20,000 is the bottom, we reclaimed key support on Bitcoin, Ethereum can't go back below 1,000, this is huge that we're holding support here, please understand this is only just the beginning. I promise you that as long as there are people saying, I'm going to buy the dip, I'm buying the dip, I'm dollar cost averaging on the way down, as long as this is the narrative, the market has not bottomed. Markets don't bottom when people still want to buy the dip. They bottom in cold, dark winter when no one's around, when it's lonely, and no one even speaks the name of the asset that you're discussing. Everyone has considered it to have failed. There's no content, there's no interest, there's no excitement, there's no one buying the dip. And if they are, they're not talking about it. That's what markets look like when they bottom. So for all the people sitting here saying that the crypto market is bottoming and that now we're going to move back to the upside and, that was it. We just had to shake out a couple of weak hands and, take down a couple, projects and maybe a couple exchanges had to fail. I promise you this is only just the beginning. This is only just the beginning of what is to come. And if I'm wrong, that's fine. I will fully admit it. But please just pay attention to what is taking place. The Federal Reserve has literally only just begun. And in their Fed minutes, they have essentially came out and said, hey, look, at the end of the month, end of July, expect 75 basis points, maybe 50 if we're lucky. Expect 75 basis points, maybe 50. But here's the thing, though. There's literally nothing that can happen in between now and then. There's no magical numbers that can come out or statistics or things that could change in the economy. There's literally nothing that can happen with the exception of a black swan event, something that we haven't figured out yet. We haven't even fathomed. We can never, ever expect, let alone plan for, that is going to shift the Fed's narrative from fighting inflation. There's literally nothing because we know they have two mandates: price stability and employment. Employment's at record lows. Price stability, aka inflation, is at, record highs, at least for the last 40 years or so. So while one is at record lows and one is at record highs, until they come back in line with each other, we can't expect the narrative to shift at all. And there's literally not one number that can come out that's going to change the narrative. So again, please, 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 right now, of all times ever in all of existence, protect your capital, protect your principal, fight the FOMO, and do not give in to the greed. Everyone feels it. Everyone feels that greed as something starts to pump up a little bit or moves off the bottom, or you see the, signs or CNBC talking about, oh, China stocks are up 30% off the lows. They're back in a bull run, blah, blah. Please just zoom out a little bit. Pay attention to what's going on. And most importantly, remember, no matter what, that none of this is financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. What's going on, Cool Sheet? Good to see you. What's up to you as well, homie? Arturo X, what's up, brother? Good to see you. Honkiness in the house. Hey, y'all. Hey to you as well, my man. Cool Sheet says, how big the dead cat? 28K-ish? I mean, it's possible. Anything's possible, but I wouldn't get too excited about it right now. But we will look at the long-term crypto charts. Crypto Galt, what's up, man? Morning all. 7 watching, 9 likes. That's right. Somebody switched accounts, liked it, came back and liked it again. I like your style. J Hoff, what's up, brother? CW says smash that like button. That's right. That's right. Good to see you guys. Appreciate it all. So let's just jump right in and get started here. And I'm just going to warn you ahead of time. We are going to talk about the DXY today. And, we're just going to take an honest look at it. But remember what I've been saying for months about soon everybody will be talking about the DXY and how strong the dollar is and how it's at 20-year highs and how it's going up to 120 and all this stuff. Well, here we have it in real life. Remember what we said about the oil chart and how it was getting ready to dump and the trade was overcrowded and energy was done and we're going into rebalancing for the half. And now everybody's talking about why oil just dumped 10%. Just remember who talks about all this stuff before it happens and then who gets on and reads you the news, okay? Because, honestly, it's fun to hear about what just happened or what already happened, but it's too late to do anything about it. And then remember who talks about all this stuff ahead of time, sets the narrative, builds the case, breaks it down, makes it simple, and understand that I'm here to help you guys learn and understand how I see these things. Not always going to be right, but, the track record is pretty fucking good if you ask me, so let's jump right in and take a look at these charts. So we got TNX, obviously sold off. We came down to our key level that we were watching for. We stopped slightly above it. Okay, so as long as we're above that 2.72%, we know we're still okay because we have not taken out that previous low right here. But regardless, we have a high, we have a low, we have a higher high. Until we take out that low, we don't have a lower low. Even once we take out that low, if we take out that low and come back down, we can still technically come back up, put in a lower high, and then we start looking at like a daily downtrend. Right now, what does this look like to me? Well, if I look at this chart right now, what I see is bullish divergence potentially going to develop. Now, it's still too early to tell. We don't know yet. But here we have a low, and then we have what appears to be potentially a higher low. Now, we don't know yet, but obviously we have a bullish engulfing candle, which is a pretty good start. Okay, once you bullishly engulf the previous candle, it's a start. Now, we still have all red histograms, but, we had some bearish divergence from our peaks as we put in a higher high. But also, if this starts to roll back over to the upside, we have a lower low on the histogram right here. So there's potential we could actually start developing bullish divergence and then get a pop to the upside. Now, it's still too early to tell, but it's worth paying attention to because obviously we have a bullish trend. So when we get bearish divergence, it plays out, but it underperforms. When we get bullish divergence, it plays out and it overperforms. And we've been seeing that over and over and over again in the DXY. So we just keep an eye on that. And then also, people want to talk about fundamentals and stuff all the time. Let's keep an eye on the fact that, by the end of this month, the Fed is going to come out and let's just say they're telling the truth. And, those Fed minutes mean something. And, I'm right and nothing changes between now and then that's going to change the Fed's view or what they're going to do about it. We can expect that 75 basis point hike. We can expect that because that's what they said they're going to do. Maybe 50 if we're lucky. But we already know that this level right here, the market is pricing in one thing. And it sure looks to me like this is going to start moving back to the upside as soon as we get that hike. So is this just, having a little cool off period in the meantime, while quote unquote peak inflation has been reached, and that whole narrative keeps playing out. People are going to say peak inflation for the next 2 years. Okay. And there's going to come a time. I promise you this. I absolutely promise you this. There's going to come a time when people will actually be right temporarily. They're going to say peak inflation. We're going to have a couple numbers to back it up. And then they're going to say, that's it. That's peak inflation. It's done now. It's going to start coming back down. Everything's risk on. Let's go. It's back to playing the game. But then sometime shortly afterwards, inflation is going to ramp back up again. And then we're going to have a new high on inflation. And then people are going to start saying, well, it's peak inflation. It's lagging. That was because of said, whatever. It was the war. The inflation is not going to just peak and then that's it. And then it's done again. There's going to be a tug of war taking place between, the markets and reality. So even once we do see a peak number and then we see 1 or 2 or 3 numbers afterwards where it comes down month over month or year over year, be careful because there's lots of little peaks along the way, but it's not like the peak. And the Federal Reserve knows one thing for sure, 100%. Jay Powell is a lawyer. not an economist, but he does know one thing for sure. He definitely knows one thing. He grew up in the United States during the 1970s and the 1980s. So he experienced inflation. He experienced how nasty it was and how long it went on for, literally a decade. And nobody ever talks about the fact that the 1970s was literally plagued with inflation for a decade before finally in the 1980s, Paul Volcker came in and jacked the rates up, to 20% and finally took care of inflation. I promise you, we don't ever want to get to that situation. Not where the, Fed funds rate goes up that high, but where we have sustained inflation lasting for a decade. The world is not going to be a pretty place if inflation lasts for a decade. So that being said, we are so far from any direct comparison or peak inflation or whatever other narrative there's, because this is the narrative that's going to come out now. Now that energy prices are pulling back and they're off their highs a little bit, it's going to be like, oh, that was it, peak inflation. And then we're going to get another number and it's going to be higher. And then people are going to say, well, it's peak inflation, but, there's still some coming down the pipeline. And then like another number is going to come out. Well, the next one after this, though, is the peak, but it already peaked a while back. And this is a leading indicator. And that's why we know it peaked. And we're just waiting to get all the inflation out. They're going to make up excuses the whole entire time and try to pick the top on inflation. Just please don't fall for that BS, okay? Don't make informed decisions based on bad information. So that being said, TNX could cool down here a little bit. We're basically down towards the bottom of the range right now in a bull run. So, every time we've gotten down since we flipped this bullish, each time basically we've come down to like key support levels, bearish control zone was basically like the better areas to reload for further move to the upside. And that's about where we're at right now. We're basically bouncing off the bearish control zone at the 20 level. So, any further sideways movement, the oscillator continues to trend down, likely to present a good opportunity to load back up. Now, is it going to come out to 200 exponential and simple? Probably not, because typically in a strong uptrend, we don't retest those key levels because people are front running each other to get to it. So now let's take a look at TLT, because now that's the same thing. The narrative's here. Now it's time to buy bonds. The bonds are down. They're down a certain percentage. Load up on bonds. We had some bullish divergence that played out. We got the retest of our key level. I mean, this isn't just, a lucky chart. We didn't just, luckily get the exact retest of the breakdown area and the 200 exponential and simple. I mean, we're not the only ones looking at this. This is literally a back test after a break of support. We lost that ascending support line. We're back testing it. And now, we're back testing the 8 and 21 moving averages. So, we have basically seen the indicator oscillator move all the way back up to the top of the range. And all we did was just back test this itty bitty little thing right here. So now we have reloaded this indicator oscillator back to the top of the range. So when this decides it wants to roll back over again, it has all its energy back. And it can go all the way back down to the bottom of the range. And when it goes to the bottom of the range, we see obviously the moves that happen. So be very careful here. Now, I'm not saying there's no possibility that, TLT goes back to 130 and retests another support as resistance. But the fact of the matter is, just be very, very careful with this whole peak inflation. The bond market is priced it in. The rates are going down from here. The Fed's going to start easing. As soon as this happens, just please be very careful of all that stuff. So the VIX on the daily, still operating inside the range, coming closer to the bottom of the range. As long as we're inside of this triangle, we expect the triangle to hold. It could literally be months before we see a breakout in one direction or the other. People are talking about how the market can't peak if the VIX doesn't go up to 40, et cetera, et cetera. I mean, let's be real. We're at elevated levels. Anytime the neutral level is basically 20 or 21, and we're at 26 right now. So, we're a ways above our typical standard area. We're definitely operating in the, top portion of, essentially our horizontal channel. So if we look historically, matter of fact, we can go to a longer time frame at this and just talk about the VIX, because now everybody's talking about how the VIX is and we'll know it's peaked and blah, 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 all this stuff. Historically speaking, this channel is drawn in, obviously, by me. The top of the channel, is the areas where we have peaked for ridiculous highs or lows in the markets. And then obviously the bottom being where we have, found our trough, our bottom, or the, complacency levels, lack of volatility. And then we see the heart line coming through the middle right here. And we can see for periods of time. We have extended periods of time when we're above that level. We have extended periods of time when we're below that level. Okay, but that's our essentially like our neutral level where you would expect it essentially to happen. But most of the time we're operating for long periods of time above it or below it. So all of a sudden we don't just go from operating above it and then being in the top portion of it to just back to like low volatility. Everything's just relaxed. It's cool again. Fear's back out of the markets. Volatility's out of the markets. And we just melt up again. It doesn't happen like that. Okay, so even if this does break down from here, you know, and starts cooling back off and I'm wrong and the VIX is going to go down and markets are going to go up, we're not just immediately going to have like low volatility again. We'll see like big spikes up and down and, you know, a consistent kind of like volatility increase in the markets as long as we have all this uncertainty. And if there was ever a time of uncertainty, you know, at least in the last 5, 10 plus years, I'd say it's probably now. Arguably, I would say last 40 years. So that being said, you know, still operating inside the range, nothing crazy going on here. So last stream, we took a specific look at U.S. oil, WTI crude, and I pulled it up right next to the wheat chart. And I literally scrolled over like this and showed, you know, the wheat chart compared to this. Well, since then, it literally did exactly what the wheat chart did, exactly what we discussed. You know, and we talked about the pattern, the psychology behind it, exactly what we're expecting. And then you guys know, obviously, you know, my key target range, I talked about 100 support, but 97.50, and then obviously the bottom of our channel, a retest of the lows, which we came exactly down to and retested with that wick. We also bounced to 200 exponential and 200 simple. So that being said, obviously this played out exactly like we said. And once again, we're able to show a specific example of the mentality and what to expect right next to each other. And of course it played out exactly. And now of course everybody's like, well, you know, of course it was over, hyped up and the cooling demand and, you know, 4th of July is the peak for gasoline consumption and, you know, maybe the war is almost over and blah, 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 blah. You know, who cares? Talk about it afterwards. Who gives a shit? You know, the day before, everybody's talking about how oil was going to be at 150 soon. And then the day after, everybody's like, well, it's probably going to be at 65 soon. But, you know, all they're doing is coming out and talking about stuff after it happened. They're broadcasters. They're news. They're entertainment. Please understand the difference between technical analysis and entertainment. Understand the difference between why this channel gets 100 views per video and other channels get 1 million views per video. People are not trying to learn things in real life. They don't want to learn how to do something. They think they do. But really, what do they want? They want entertainment. They want somebody to hold their hand while they lose all their money. That's what they want. They would rather feel comfortable while they lose all their money than spend the time to actually learn. So that being said, no surprises here on oil. We're at the bottom of the range now. It is important now, though, that we pay attention to what is taking place. Because this is what we've been talking about. You know, essentially, the blow off top or like the peak of oil and what that leads to. Now, I'm not saying oil will not put in a new cycle high. I actually think it will. But that being said, you know, we know when we start consolidating above monthly, especially moving averages, after a long-term, you know, bear market or downtrend or consolidation period, you know, essentially what we would expect is a back test of those moving averages after we break above them. So we don't need to come all the way down, but there is a legit possibility that we come back down to the 70s, you know, 80s, possibly even the 60s before we continue to the upside. We've been talking about this hard sell signal on oil, okay? We had this rejection candle hard sell signal, and then we actually came up and put in, you know, 2 more candles, not a higher high on the wick, but a highest high close. And where did we close that level at? Well, again, at exactly the peak from 2011, the key area that we were, you know, paying attention to or watching. Not the 886, but obviously our topping area was 114. Now, we had that initial wick up above 114, but if you look at where we closed at, we closed the highest high, you know, ever of this cycle at 114. So we literally called it within the dollar. You know, obviously the wick, little squeeze right here, but, you know, essentially nailed it. So that being said, what do we expect now? Well, we get the hard sell signal coming out of the bearish control zone. We now have one initial month sell-off, and now we're at the beginning. You know, we're 1 week into the second month sell-off. Backtesting key moving averages. So I would expect most likely a couple months follow-through, back down, consolidation period, more damage done to the energy markets, and then afterwards we can see if it looks like we're going to resume the trend, etc. But right now, you know, on the monthly, we look very toppy, at least temporarily. On the weekly now, we have broken down below the 821, potentially for a bear cross, potentially for a retest, into the 70s or 60s. We talked about the bearish divergence that was taking place on the weekly chart and how we expect further downside. And now we're very close to violating that support right here, the bottom of the channel. If we lose the bottom of that channel, we basically start back testing our, support resistance. So we're looking at like 84 was our previous resistance. We would expect to act as support. Potentially if we come down from there, 75. We obviously have our moving averages, etc. So it's worth paying attention to all those things. But right now, it looks like on all time frames, we're likely to get some continuation to the downside, at least temporarily. After that, we'll see how it plays out. We'll have additional targets. We know the measure move breakdown for the channel. All that is just literally the distance from the bottom of the channel to the top of the channel. And this is obviously, a conservative measure move breakdown. I don't expect us to just immediately break down. We likely come back up, retest a heart line around 104. And then when that gets rejected, come back down, bounce a little bit, and then potentially break down from here. Obviously that measure move takes us down to somewhere around like 78, 80. It's going to be a stair step down. There's going to be people buying the dip. I already hear them talking about buying the dip in energy. Now it's time to buy the dip. Who's buying the dip in energy? All the people that missed the trade to begin with. And we call them the bag holders, okay? Because they think they're buying the dip before we go higher, but really they're just holding our bags before the meltdown. And then at the bottom, when they're just unloading these bags, they're just giving them away for free. That's when we show back up and go, oh, I'll take those now for half the price. Yeah, I'll get those. So that's what I fully expect to take place here. Now we're at key support. We're at the bottom of the channel. So from here, I think it's more likely that we do get a move back to the upside. At least, a quick little 8.5%, possibly 12%. Again, we can come all the way back up to the top of the channel potentially. Most important thing is consistently putting in lower highs and then paying attention to, we have this horizontal support. Do we take out that support on a daily? If we take out the support below 95 on a daily close, then we expect the measure move. Until then, we would expect this support to hold. But we know obviously this really, really, really looks like distribution taking place. Now the difference between accumulation and distribution is, okay, distribution is what's actually taking place. Accumulation is what people think is taking place. And the difference is the direction of the break at the end. Because you could say it's accumulation, and if it breaks to the upside, you're like, see, I was right. You could say it was distribution, if it breaks to the downside, you're like, see, I was right. But it doesn't matter if you don't know ahead of time whether it's distribution or accumulation. So we're going to be doing some, chart pattern breakdown videos in the near future. You guys loved all of these static videos that I put out. So we're going to be doing a series of videos on basically distribution, accumulation, various ways to recognize Wyckoff patterns or other common chart patterns, etc. And we're just going to keep building up, sharpening those tools and increasing the knowledge of the community so that we can, increase our wealth over time. But that is U.S. oil. Again, be very careful listening to all these people coming out, reading the news, and then act like they're telling you something. So Dow Jones, nothing really happening here. We're basically consolidating at or around the moving averages. The truth is, from these levels, the most important thing to do is to reclaim the 8 and 21 and then start crossing them back to the upside. And then, after that, we want to start retesting previous support resistance, 200 exponential, 200 simple. So, that's what we're looking for. Now, what's actually happening in reality? Well, the daily chart is not really giving us a ton of information. The weekly chart, we're very clearly just bouncing the 200 exponential. We'll see it again when we get to the NASDAQ and the old Ruddy or the zombie index. We'll see exactly what happened last time on this. So, on the weekly, we bounce the 200 exponential. We come up, we retest resistance, aka the 8 moving average, and then we came down and then found support at the 200 simple next. So that's what I'm expecting for the Dow Jones. Retest of 29,435, new low actually, but a test of the 200 simple moving average. From there, the market will be much more comfortable to try to move back to the upside, as the majority of Wall Street is looking at simple moving averages, not exponential moving averages. But obviously, we're not the only people looking at both. So that being said, we're still seeing a ton of weakness. I see no signs of bottoming. Each time we did the slinky theory, we took a step down, half a step back up, a step down, half a step back up, step down, half a step back up, a step down, and now it just looks like we're taking a half a step back up before the next step down. That's what I'm seeing here. So And then on our monthly, we talked about this as well. We don't want to get extremely bearish right now after closing below the 8.21, because there is potential that we get that retest of the 8.21 and try to avert the cross before going lower. And we could succeed. We could come back up here, close back on top of it. We could avert the cross completely. We could get a situation like this where it looks like we're crossing slightly and then we come back up. You know, this would be an averting the cross type situation. It's definitely possible. But we see the hard sell signal. We left the bullish control zone, all red histograms, red slope line, and the 8.21 getting ready to come down. So to me, any move to the upside we see from here is likely just a retest to try to see, hey, are we for sure bearish here? Are we retesting support and it's acting as resistance? Okay, we are. Unload the position. Let's go lower and then we'll see what happens. So that's what I'm seeing happening on the major indexes. The S&P looks very, very similar. I mean, almost exactly at this point in time. Again, we can just switch. We're going to skip the weekly and go out to the monthly. Monthly looks very much the same. So again, markets are not forgiving though. So we typically will push back up and underperform, and then we'll see continuation to the downside. But again, the target on the weekly is a 200 simple at about 351. So it's another, 9-10% back to the downside. All right, and then we have the NASDAQ. So NASDAQ has broken down below the 382, trying to hold up on these moving averages, trying to build some momentum. People are saying, oh, this is the bottom. Tech's going to lead its way out of the rally, out of the bear market, blah, blah, blah. It's all BS. It's all BS. Same people have been saying that we bottomed. They were saying we bottomed here. They were saying we bottomed here. They said we bottomed here. They said we bottomed here. They said we bottomed here. And they're going to say we bottomed here and here and here. And as low as we go, they'll keep saying it's the bottom. And then eventually they'll be right because we will hit the bottom. And that's fine. But see, on the NASDAQ here, we initially came down to 200 exponential. We retest the 8. It rejects us. We come down to 200 simple. We come back up to the 8. It actually rejects us again. So we'll see what happens on the other indices. But that is exactly what we're looking at. And then when we look at the monthly here, we can see we broke down. We attempted to retest all the way back up. We sold off. We came back up. And then eventually we closed down here. So that was an attempt to retest and reconfirm or stop the 821 from confirming to the downside. It failed, and then we saw the continuation. So that's what we need to look out for on all of these, indices. As all this stuff acts the same because it's the same people trading everything, same bots, the same algos, etc. So the Russell obviously melting down at key support right now, and it's just sitting on support. It's not like we hit the support and we just bounce off of it and now we're going back up. We're literally just sitting on it. Okay, and we know the longer we stand on the cracked ice, the more likely we are to fall through. The cracks are getting bigger. It's just a matter of time. Just a matter of time, in my opinion. And then again, if we just switch over to our weekly chart, we take a look at the same thing that happened, but even weaker. We come down to 200 exponential, penetrate, hit the 200 simple, come back up, reject it at the 8. Now we're below the 200 simple. We have now confirmed, we have two little blips right here, where 200 simple and 200 exponential were both red and pink, respectively, at the same time. So as long as we are underneath 1779, call it 1800, as long as we're under 1800, every single day, week, month, whatever that goes by, we're so much closer to just confirming into a weekly bear market. We technically already did a couple times, but it just looks like inevitable at this point in time that we see a true bear market cross, and then another big leg down. All right, so let's take a look at our various sectors. Here's another one that I keep hearing everybody talk about that is like absolutely insane. All everybody's talking about right now is how many sectors are above their 50-week moving average. Oh, the markets have bottomed because 5 of the 11 sectors are back above their 50-day moving average. So everything's great now. Yeah, okay, but how many of them are below their 200 moving average? Because that's a lot more important than a 50 moving average. Absolutely blows my mind how stupid these people are. So we'll pay attention as we go through the 11 sectors in the market, and we'll see how many of them are above their 200 exponential or simple moving average. And then we'll see if we're ready to call, the bear market's over. So XLI, industrial, obviously terrible, hanging out at the lows. Looks like it's ready for another leg down, obviously in a bear market below the 200 exponential and simple. XLP, consumer staples, again below the 200 exponential and simple, one of the stronger sectors, at least getting the retest. But keep in mind, this is really just the initial retest after putting in a series of lower highs and lower lows, which is typically followed up by further downside price action. So this is essentially the reversion of mean retest, before we likely go lower. Again, bear market under the 200 exponential and simple. 200 simple is trying to like curl back up, but we'll see what happens here. Let's not get too excited. XLF, financial sector, obviously melting down, new lows, hanging out at the lows, below the 200 exponential and simple, very clearly in the bear market. Okay, so far all of them in the bear market. XLRE, real estate, new lows, hang out at the new lows, retesting previous what was support as resistance, below the 200 exponential and simple. Again, bear market. We're sensing a pattern here. XLV, healthcare sector. And keep in mind, everybody's talking about, oh, the biotech and this, that. Now is not the time to buy profitless companies at all. We said it at the end of the year and into the beginning of the year. We said this year is about one thing and one thing only. And our saying for this year, until something changes, is if it don't make money, it don't make sense. So I will not buy any company, any stock, any crypto, anything if it does not make money. If it's not profitable company currently, it doesn't make sense to invest in a non-profitable company in what is taking place right now. Okay, so that being said, biotech, get the fuck out of here. Most of those companies never make any money for anyone but themselves. And they're lucky if they have one product ever or drug ever that is a success, and then they use that success for the rest of their lives to siphon money away from suckers. So be very careful in the biotech space. All right, because it's just like crypto. For every 2,000 biotech companies, there's 3 good ones. So be very careful. And we don't know which 3. If we did, we wouldn't do these videos. I would just tell you, and then we could all just go, play outside. So XLV, healthcare, again, one of the stronger sectors, just confirming into a bear market, now retesting it. Reversion to the mean before we likely go lower. We can see very clearly, what it looks like when the trend changes. When we go from bearish to bullish, we retest, and then we start trending to the upside with blue lines. Now we're seeing the opposite. We're below those lines. We're going into, a uncertain environment. So while this is obviously, a safety play, so to speak, very much still in a bear market. So far, everybody. XLB materials, very much in a bear market, literally at the lows, like, one day off the lows. Bearish control zone, hard buy signal. I mean, keep in mind, though, these buy signals are counter trend, so they have like zero reliability. We're not buying, we're not taking buys right now, buying dips. We're selling rips. So the sell signals are much, much more reliable than the buy signals, if we're in a bear market, which we are. So again, another bear market. XLY, consumer discretionary, well below the 200 exponential and simple, hanging out at the lows, absolutely atrocious right now. Again, another bear market. XLU, okay, hang on here, guys, we did it. We're fine. Everything's fine, okay? Because utilities, with that last little pump back up, utilities like about 30 cents above the 200 exponential and simple moving average. So, I don't know why everybody's so skeptical and so negative. Obviously, the sectors are fine. Utility is propping up the whole thing by about 30 cents. Congratulations. Again, one of our safety plays. And then XLC, communication, complete meltdown, by far the worst performing sector. Looks like complete trash, very much in a bear market. XLK Tech, well below the 200 exponential and simple, at the lows, clearly in a bear market. Are we sensing a pattern here at all? I mean, it's like we're the only people looking at charts. Well, that know what we're looking at. Everybody else is like, I heard someone say 50 moving average, and it sounds good. Bullish. XLE, energy, obviously, we predicted the big meltdown beautifully. I told you we were going to come back in a couple weeks and talk about this bear cross and how we came down here and retested the 200 exponential and simple. Obviously, it happened. Another lucky guess. We shook up the 8 ball, and it said down. So I was like, okay, the 8 ball says down, so I guess we'll go to the 200. Oh, I shook it again, and it said 50s for morons, 200 is what we're looking at. And that's how I knew it was coming to 200, because the 8 ball told me. But that being said, obviously, energy now hanging out between the 200 exponential and simple. It's been a bull market the whole time. We have absolutely capitalized on this bull market. But, got to get the hell out of the way when we see these crosses. Protect capital and see what happens. So we're already at, we took profits up in here, around, 88, 89, 90. And we're down at 68 now. So we could load up right now and we're winners. We already won. We did it on the way up. Now we can get back the same amount for much less or more for the same amount. But regardless, this one is essentially neutral. So at this point in time, we have literally utilities is like 30 cents above the moving average. We have energy in between the 200 exponential and simple moving averages. Transportation, complete meltdown, looks like total trash, obviously, at the lows. And then just to throw it on top, the semiconductor space, obviously. And keep in mind, semiconductor space is known for its, bulls and then busts. So, booms when it's bullish, busts when it's bearish. And, obviously when we zoom back out and take a look at this thing, we see that we have been in a prolonged period of booming. And now we're seeing something that we haven't seen since our 2008-9 bust. So, matter of fact, we can go out to a longer time frame here. But look at the weekly. We got to be real careful here, because this sure looks like a potential blow off top type scenario to me. We didn't see something. Obviously, this was confirming the bull market, consolidating, then we go higher. This was probably looking to a lot of people like a head and shoulders. We broke down from the head and shoulders, and then that was basically a spring before we went massively to the upside. So there was people here that got out at the wrong time, I'm sure, and then would not get back in because they trusted themselves over the market. And that's why it's so important to just say, you know what? Sometimes I'm wrong about stuff. Sometimes I get a feeling, but the market is always right. And here we see the bull market was right. And at that point in time, there's people that did not get back in the semiconductor space from 2013 because they were wrong about this little, spring basically down here where you break through support and then actually that's the bottom and then you go much higher. It's like the final shakeout. We have a very clear, this at the time would have looked like a beautiful head and shoulders pattern very clearly, and then this would have looked like a breakdown from that head and shoulders, a close below support, and then everybody would be, oh, we're going down here, selling short, and then next thing you know, this thing just goes on the rip of a lifetime. But we have not seen ever the chart look like this before. We've seen it retest the 200 exponential and simple. We've seen that. But we haven't seen something like this where it looked like a large amount of distribution taking place and then an aggressive, topping pattern. The same way that we saw an aggressive bottoming pattern back here in 2008. So we want to be very careful, because in hindsight, you look at this and go, well, that's obviously a bottom. Look at that thing. Well, that's how this looks to me, but we'll wait and see. So anyway, semiconductors obviously not part of that, but worth watching regardless. Very important, as it's one of our leading indicators. And you guys know energy, transportation, semiconductors, and the 210 are our four horsemen. So that being said, so we looked at all 11 sectors there, and of all 11 sectors, we have utilities technically still above the 200 exponential and simple by 30 cents. And then we see energy above the 200 simple, below the 200 exponential. So of our 11 sectors, 9 are very clearly, 7 are very clearly in a bear market. 2 are in the middle of a reversion to the mean bear market retest before we go lower. And then 2 are barely just hanging on right now. So in my opinion, that's very bearish. I mean, if we don't see at least a quarter of the sectors above the 200 exponential or 200 simple moving average, we definitely can't get bullish on the markets. And if we don't see at least 50 above, the breadth of the market is very important. So sometimes we can see one sector or one stock or one crypto doing well, but it takes a lot more money for all of them to be doing well. So the same way we saw everybody rushing into energy, and then we said, okay, time to get out because everybody's in the energy trade. Everybody's talking about how it's going to go up forever. Nothing's going to cool demand, blah, blah, blah. We know that's all bullshit. Whenever everybody else starts talking about what we've been talking about, that's how we know it's the top. Okay? Once we've already rode a trend all the way to the top or all the way up and made a bunch of money off it, a bunch of profitability, we've been right about a whole narrative, and then everybody else is talking about the same narrative, that's how we know it's time to get off the train, because the train's about to crash. So that being said, when we look at the 10-year spread, everybody was talking about, oh, it's topping out, we're at resistance, going back down. Here it was, oh, the yield curve inverted, we're going into recession. Then it was, oh, now we're, topping out up here, so we're not in recession anymore. Now it's, oh, they crossed again, now we're in recession. And then it's like, oh, it's rolling over. They change their mind every day, okay? I change my mind sometimes, but based on facts and information. Keep the narrative the whole time. And the narrative is we broke out of a 40-year trend. We took out the previous high. So the next thing we do is we come up here to roughly 5%, 5.2, and we retest the previous high before that. And that was 2007, 2008. And we see a lot of parallels that are taking place right now, between 2000 meltdown, 2008 meltdown, 2018 / leading into COVID meltdown. And now here we are doing even more bearish things for the markets. So that being said, be very, very careful who and what you are listening to right now, because people will literally, the whole bear market, after being wrong for years or even decades, they will literally get on TV or any platform or stand on a box in the middle of town square and yell about how the bottom is in. This is the best buying opportunity of the lifetime. You will literally hear people say things like generational buying opportunity, the opportunity of a lifetime, a second chance, a gift from God. They will use all kinds of just random BS to explain why this is it, and now this is going to be the one, after they've been wrong 98 times before that. So please, please be very, very careful. Very, very careful, because we don't know how nasty this is going to get. It's already nasty. We got out of the way of the nastiness. We just don't know how much more nasty it's going to get. And sure, you could sit here and say, well, I'm 26 years old, and I got plenty of money, and I don't need this money for a long time, so I'm just going to buy the whole way down. Sure, you can definitely do that. As long as you don't mind that we go down another 50% or 75% or 90% or some of that money goes to zero, then by all means, do whatever you want. You got plenty of time to make up for it. But the majority of people that are paying attention and care about this stuff, and the demographics of people that are interested in not only investing or participating in markets, but actually learning, the majority of those people are between, the age of 40 and, 55 years old typically. So that being said, if you're younger, take some more risks. If you're older, be a little more cautious. But just because something has worked in the past doesn't mean it's going to work again. Check out people's consistent track record, because there's a lot of people that will be right about something 20 years ago, and then they've been wrong ever since. And they'll sit here and talk about how they were right about that one thing that happened one time 20 years ago, and not talk about the other 932 calls that they've made since then that have been completely wrong. So that being said, let's take a look at the dollar. Speaking of everyone being wrong. So dollar broke out to the upside again. We talked about this situation and how it looked like the dollar was developing bearish divergence, and it did. But then what happened after that? We cooled back down again, and now boom, shot back up to the upside. So here we are now at 108, 107 rather. And you guys know, obviously, if you've been following this channel for any amount of time, you know that we knew that was going to happen. We called the bottom right here. We talked about all these things that led up to it, how we just literally confirmed into a monthly bear market for the first time in 40 years. And I know you guys are like, dear God, will you please stop talking about the dollar? We get it. We get it. You were right about the dollar. Sure. But we're getting ready to shoot up to 120. And that 120 level, we're already at 2002 levels right here. Last time we were at this strength in the dollar. We're getting ready to shoot up here to 2000 levels and retest 120. Okay, this thing is getting ready to literally go parabolic. We see it happening. It's extremely bullish, very clearly in a bull trend. And we need to be very careful right now with what's happening, because the narrative or the fundamentals not only, are not good right now for the opposition, aka the rest of the stuff in the basket, but they're terrible. How is Japan doing right now? Terrible. They've been that way for decades. How is Europe doing right now? Terrible. They're in a land war and an energy crisis, and run by incompetent, woke idiots. And if you're from Europe, I'm not being mean to you specifically. The whole world is run by incompetent woke idiots. But you guys are taking the cake, okay? Yeah, I'm talking about you, Germany. Keep up the good work. But anyway, regardless, my point is, and then look at the UK. I mean, look at what just happened today. You have like 15, of the top cabinet members stepping down suddenly, randomly, definitely not coordinated, basically saying like, Boris is an incompetent moron, and, there's no reason for us to even try this anymore. I mean, this stuff is a big deal. The UK is not, this isn't Sri Lanka over here. Granted, it's not like they have some massive GDP or something like that. But regardless, people care about the Okay, look, no offense, Sri Lanka. But let's be real. Nobody gives a shit about Sri Lanka, okay? People care about the UK. And again, I'm not trying to be like mean or whatever, but we're talking reality here. I keep it real. So, the fact of the matter is people care about the UK. It's kind of a big deal. They got Brexit going on. They got quite a bit of stuff going on. So this is a real shakeup we see going on here. So now we have Japan's been looking like crap forever. The euro is now trading at par with the dollar, 1-to-1. Literally, like, I can't even remember last time it was like 40 years. Canada, no offense, Canada, you've got some potential because you have some commodities and everything, but they're not looking so hot. And then UK, obviously, so the dollar sure doesn't look great right now. Sure, Brandon's our president, but it doesn't look nearly as bad as some of these other countries. So do I expect all of a sudden, the fundamentals to flip and then the technicals to flip and then the dollar just goes weak again? No, and I'm pretty sure we'll see it coming. So that being said, next area for the dollar is basically up here at 120. I've been screaming at the top of my lungs for literally years as we just, shot straight up basically. Now, in hindsight, obviously, 2008, the dollar has been strengthening since then. But this is when we were really talking about how strong the dollar was and how we expected this thing to go parabolic. And, that was on the channel. You can go back and watch it. And, obviously that was double bottom, played out perfect. So I fully expect this dollar to keep melting up. And it's, the trend is accelerating. We're getting bigger and bigger, more aggressive candles to the upside. So keep that in mind. And again, we have discussed many times about why it's so important. The strength of the dollar as the world reserve currency is bad for everyone else but America. Okay? So, I talked about this many, many times, how the dollar was literally giving people an opportunity to get out of their dollar-denominated debt before the squeeze happens. And when this squeeze happens, the world is going to be a nasty, nasty place. It's going to be very, very hard for a lot of countries, especially people with, dollar-denominated debt that are not making their money in dollars. But, if you're in the United States, that's good. Because even though the world will be going to shit, the dollar will be really strong. So we'll be able to buy tons of other people's stuff for super cheap, which is great for us. Except for the fact that how are we ever going to have good GDP when we take all of our money that's worth so much and then buy everybody else's stuff? We're not. Because that doesn't go into the GDP. So, how long is the recession that we're probably likely, arguably already in going to last for? Probably a long time if we just only ever buy other people's shit and don't make anything. So Tesla is next. So we've been talking about this Tesla situation. Essentially, we're just chopping sideways inside of this neutral pattern. Technically, it's neutral with favor to the downside. I did get taken back out of the trade slightly above my stop loss. But the most important thing was just not turn a winner into a loser. So we can always re-enter later if we want and something changes. Possibly still get that short squeeze or that, retest reversion to the mean back up to 900. Seems less and less likely. Tesla obviously had a big miss on, car deliveries. And, let's be real here. Tesla's very, very overvalued. And I fully expect it to continue. I expect to fully continue to the downside. There's just, I don't see a case for it, technically or fundamentally, to be like bullish right now. So, we could build up, get back on top of some key supports and start looking okay, but not now. ARKK, people are talking about, oh, this is it, load up on the ARK stocks. The fact that ARK still has inflows, tells you how stupid people are. Because stupid people that are buying ARK stock, no offense if you own any ARK stock, you're just not one of the stupid people, but also you probably don't make the best decisions. People that are buying ARK stock are morons. Obviously, this thing has absolutely melted down, and they're buying based on something that they saw happened leading up to probably, most people probably bought ARK up in here, or 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 here. Nobody bought ARK back here. Nobody bought ARK back in 2018 at the same levels it was at now. Nobody bought it back in here. We know that because the market cap was microscopic back then. And it's an entire life. People talk about the performance. Well, if you bought ARK stock back in blah, 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 it's worth blah, blah, blah. Well, if you bought ARK stock on literally the day it came out in 2014, it's up 100%. So you doubled your money since 2014. So this thing has historically performed worse than all of the major indexes in that amount of time. And yet people are still buying the dip on ARK stock. You want to know how I know the bottom's not in? Because people are still buying the dip on ARK stock. So EDU, we still have this trade in play for a couple more dollars. Man, I'm not going to lie, though. China is looking pretty weak these last few days. This thing is literally on borrowed time, in my opinion. So $26.21. I'm like ready to just take profits on this thing. Now it could easily break above this, consolidate, flip the 200 simple and the exponential back over blue, and then we start moving back to the upside. I will rebuy at a higher level after taking profits and locking in my gains. Neo, again, another Chinese company coming back up, retesting the 200 exponential and simple, showing weakness now, starting to roll back over. If we see this 821 crossing back to the downside, fully expect a retest of the new lows and no new lows after that. This just looks like the periodic retest of a 200 exponential and simple that fell slightly short. NVIDIA obviously putting in new lows. We know the entire semiconductor space looking weak. Now they're all coming out and saying, oh, here's the thing. We did sell like a lot of semiconductors for like the next few years. And, it's not like we can just start making extra ones. So there's no more like upside we can even pretend to sell you via some marketing campaign. Because the fact of the matter is we have pre-sold everything we can for the next like multi-years into the future. And there's no way that we can make more product because we only have so many factories. The factories take years to build. Semiconductors take years to manufacture. They have to travel all around the world. So nothing is going to change anytime soon where they can just make more stuff. So all they can do is like sell a dream at this point in time. And they have to sell that dream out like 3+ years in the future. So I don't really see how things can go better in the semiconductor space anytime in the near future. Now, don't get me wrong. I love NVIDIA. I was, banging the drum on NVIDIA way back. Way back. But now is not the time, in my opinion, for semiconductors and buying the dip on these big names. And a big narrative was this whole like, well, Intel, is at, in the 30s and it hasn't taken out its 2000 high and it's a total trash company and it's garbage. Or no, that's what I say. I'm sorry. That was me talking about the truth. The narrative on Intel is that they're going to build this $1 billion plant or $1 trillion plant, whatever, in Ohio, and then they're going to start blah, 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 blah. And then once they build that, they're going to blah, 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 and then bring home the blah, blah, blah. Sure. Okay, fine. Well, now we see, obviously the government dragging its feet. Intel can't build this if they don't get the multi-billion dollar, subsidies from the government and blah, blah, blah. So, what is it? Just another narrative on a stock that hasn't put in a new all-time high since 22 years ago. So, trust me, 22 years ago, put in an all-time high, we probably got some time. I mean, sure, people were like, no, any day now for 22 years. Apple, obviously, coming down here, retesting the lows, retesting some key support levels, looking weak, trying to build up some momentum here. We saw the bullish divergence. It's trying to move up. We saw a bunch of bullish divergence, and none of it has played out but more than a couple %. So in my opinion, more likely than not, we're going to exhaust this bullish divergence soon, and then we're going to go back to the downside. Maybe we get a third drive of bullish divergence, and then that's when we get a big push back up to like, 150 or something like that. Google, again, just consolidating at the lows, hanging out in this range. Doesn't look good. Typically what happens is we see distribution at the top of the range, then we get a leg down, then we see distribution or redistribution taking place, and then we get another leg down. And that's what I would expect to happen after a lot of these things have ran up literally for years and hundreds of %. It takes a while to dump all your stock on, stupid investors' heads. And I think that's what we're seeing happen right now. So Amazon, again, very weak, hanging out at this 114 level, hanging out. We had, some support right here. Again, same thing happening, trying to build up some momentum, trying to push this big narrative. Oh, it's the tech. Things are going to go up. It's already down so much. Buying opportunity, blah, 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 blah. Nothing has changed. That all of a sudden the markets are just going to be bullish. Nothing has changed. Not for smart investors. So Microsoft, bouncing off that key level, bouncing off of our buy zone, and now it is creeping back up, trying to retest the breakdown levels. It's taking way too long for this trade to play out, but still looks okay for now. We'll see what happens going into the future, but it still looks okay for now. Again, very, very weak though. And at key levels, probably going to underperform. I think 278 is probably like the big take profit area on Microsoft. All right, let's jump over into crypto. We can look at here. So we've been talking about the retest, how we were expecting, essentially, it might have been in the group actually, how we were expecting the retest from the 8 up to the 21 since we closed back on top of the 8. Start on Bitcoin. So we closed the spot market above the 8. So the retest on the futures market rather would be the 21, and that's at 22,300, which is another 10% up from here. We have a hard buy signal. We left the bullish control zone. We have some bullish divergence between this point and this point. Bunch of green histograms trying to flip above the slope line. It looks like it wants to push up here and try to retest that 22.3 level. Now, I don't know if it gets there, but that's what it looks like it wants to do. Now, we talked about the weekly and monthly closes. The weekly close, the worst it's ever been below the 200 simple, but there's a possibility we get a retest back up to like 22.5, which is 200 simple, or 23.860, which is the 200 exponential on the weekly. And that's what that would look like. Essentially just a retest of what was support as resistance before the breakdown. Now, as far as the monthly, this thing has already melted down. So the probability of getting a push all the way back up here to like that 35, 36 level is extremely, extremely unlikely. A matter of fact, because we bearishly engulfed and wiped out this candle, I would expect this to just kind of hold on to support, try to push back up, and then get another leg down. That's what I would expect. But we'll see how that plays out. So here's our Bitcoin spot chart, Bitstamp. So we see again, the retest of the 21 is slightly lower here. It's about 21,115. So we could see this overperform actually as like the futures chart, tries to tag its key moving averages. The spot chart would look like it broke back above and is consolidating up here like much higher. But really, it's just because of the weekend price action that makes these moving averages in a different place. But that being said, we do see the bullish divergence in the same way. We don't see it playing out right now, though. You would think with a big drive of bullish divergence, all these green histograms, and basically this bullish engulfing candle here, that we would see some kind of continuation. We've now flipped the slope line blue. The Stochs are angled back to the upside, up near the neutral zone. You would think there would be some kind of buying coming in here. The volume down here is absolutely atrocious. We're not seeing anything come in. This does not look bullish to me. Now, does not mean we don't see further upside, but this is not what you want to see if we're like carving out a bottom before we go higher, even a temporary bottom. We're not seeing the typical signs we're seeing. Matter of fact, it looks like we're just seeing what we already saw again. And I hate to just look right back at something and be like, oh, this is just another bearish reset before we go lower. But that's exactly what took place here. We went sideways and did nothing. We had a little fake out throw over right here and then a mini throw over. Looked like we were going to cross 821 back to the upside, and then we completely melted down. And I was talking about the whole time, the indicator oscillators are trending up while price action goes sideways. That's what I call a bearish reset. And, the opposite obviously is the case for a bullish reset, like what we saw on the DXY. And it looks exactly the same to me. We came down here, and touched the lows, or put in the lows on this candle close, and now we're basically just trading in a range. We're just going sideways between, essentially 21.6 and our low down here at 19,000. So as long as we're between 19,000 and 21.6, we're just range bound. The indicator oscillators are using all their energy moving back to the upside the same way they did before, and we're going nowhere in price action. So eventually we run out of energy because we spent it all going sideways, and then we see another leg down. And that's what happened exactly the same way back here as well. We saw the same thing happening here where we got that third leg down, and then we had triple bullish divergence, and then we could move back to the upside. So we really got to see, in my opinion, a little bit more before we can get excited. Again, on the weekly, first time ever in all of existence since the beginning of time, that Bitcoin existed for, it has never closed, open, closed, below the 200 simple. The weekly, we're below 200 exponential, it's bearish. We're below the 200 simple, and it's flat, so it's very close to flipping bearish. We're in the bearish control zone, all red histograms. You're like, yeah, but the best buying opportunities ever are below the 200 simple, based on historic results. And I would say, yeah, that's technically true. That is technically true. Right up until it's not. So, do you want this to be the one time it's not? I don't know. We'll see what happens, but doesn't look particularly great, but definitely seeing some potential for a little upside we'll see how that looks in a couple days. Look, I'm not getting excited right here. I'm not exactly like going out and taking a bunch of bullish trades. Let's be real here. Not on Bitcoin, not on crypto. We're literally in the process of a crypto meltdown. Not only just tokens, coins, assets, but exchanges, companies, etc. I mean, BlockFi was spending hundreds, well, maybe tens of millions of dollars on ad campaigns left and right, everywhere. You were seeing BlockFi ads. And now here we are, a couple months later, and BlockFi is bankrupt and getting, their last funding round was at like 8 billion or 4 billion was the last one. I can't remember. Yeah, I think the last one was at, 4 billion? And now they're selling out to Sam Bankman-Fried for 250 million? One eighth of the previous round. And now potentially all the investors are getting wiped out. Hopefully the customers will be okay. But all the people that got in early, all the Anthony Pomplianos out there just got wiped out. You seem like a genius until your investment goes to zero. Because it was a Ponzi scheme. Because where does the Ponzi scheme have to spend all their money? They have to spend it acquiring new customers because they need their money to pay the other people in the Ponzi scheme. And that's what happens with lending platforms that give you ridiculous, interest rates. If they give you a ridiculous interest rate, know that they're doing ridiculous things with your money or that they're, taking ridiculous risk. And obviously they were. I mean, they're all like bankrupt. So Bitcoin monthly looks terrible. We got the cross. We confirmed the cross. We discussed how this cross previously has been the actual low in the previous two bear markets. So we don't want to get too bearish right here. We did retest the 20K level and it's holding technically for now. But the most important thing on this chart, in my opinion, and God, I know that what we've been talking about is going mainstream when I hear other people talking about it now. And now I hear everybody talking about how there's only a wick right here and there's only one candle. And if we break down through this monthly candle, the real support is in the 20K level. It's actually this 14K level. And you know what? It's true. And I've been saying it for literally months. And now all the mainstream people are saying it. So, I mean, I guess probably we go to 14K, probably overshoot it. Or maybe we don't now that everybody's expecting it. I don't know. We'll see. Maybe we pump back up first. And then we come down once everybody's like, oh, I told you it was the bottom. Generational buying opportunity. Because remember, it was like, oh, we'll never come to 30K again. Oh, we'll never go below 30K. Oh, we'll never go back to 20K. Oh, the whole time. Same thing. We're just confirming into this bear market on the monthly. It does not look good. And obviously we talked about for months how this consolidation pattern looked like it was going to break down. And then it broke down 50%. And then we talked about how this looked exactly like that. The only difference was instead of the blow off top, we got the double top, the Adam and Eve, or, whatever you want to call it. And now here, again, looks exactly the same. So for me, nothing has changed. I can't get excited about risk on speculative, digital assets when the environment looks like it does. And with the correlation to the stock market so high, I mean, what do we really think is going to happen here? Do you think the stock market is just going back to the moon all of a sudden? Well, we know it's not because Jay Powell has made that very clear. So Ethereum looks terrible. It did get the retest that we were expecting back to the 21, consolidating between those levels, building up some momentum on the daily. I was able to avert this daily cross. It looked like it was about to cross down to the downside. Averted that cross, so that is a good sign at least. The weekly chart is terrible, below the 200 simple. Lost the 200 exponential slope. Retesting the 200 simple right now. Longer we're below this, the more likely it is to confirm into its first weekly bear market. And then Ethereum on the monthly cross down, the bear cross, all momentum to the downside. Just, it looks absolutely terrible. Absolutely terrible. Bitcoin dominance. So we're hanging out still above that ascending support line. As long as we're above that, it looks okay. If Bitcoin keeps going up and showing off some bullishness, I fully expect us to lose this green ascending support. Because if Bitcoin starts doing anything bullish, I fully expect people to pile back into the trash coins and give away all their money for free again. And that's part of the bear market is that people run to safety in Bitcoin and then they move into the trash coins and start a fake rally or, a quick little pump or short squeeze or whatever. The whales, the market makers do this. And then once everybody follows them, they use that liquidity pump to just dump on everybody. And then once they've dumped, they move straight back into Bitcoin again. So that's what I would expect to happen. We saw it happen right here. They pump up Bitcoin and then they just dump all at once. And then, we'll see what happens next. But, I'm still very bullish on Bitcoin dominance. Not as bullish as if we would have held that key support level, but still very bullish. Total market cap managing to hold up above the 200 simple. That is actually a good sign. Now, we know obviously the longer we just hang out on a support or at a resistance, the more likely we are to break it. So, we're standing on thin ice. It's cracking. There are, prehistoric sharks underneath, ready to eat the crypto market, ready to consume the whales if they fall through. So we'll see what happens. Doesn't look good, though. Does not look good. But looks better than the rest of the crypto market, to tell you the truth. So Matic, we are trying to come back up here and get that 821 cross, get the retest of the 236. Again, it's the same thing. All these charts look the same. They're just so weak. At this point in time, none of the trash cryptos can even pull away from the pack because everybody is hoping that their trash crypto, their cult coin, is the one that pumps. So none of them can pump because there's way less money in the space now. So what everybody has to do is decide on a new trash crypto coin that they like or what the best one is, and then everybody get on social media, blast it out, and then we can GameStop the trash coins. Obviously, I'm being sarcastic, but let's be real. They all just look absolutely horrendous. Obviously, very much in a bear market. If we get back above the 236, we can talk. So if we get back above 56 cents, we'll talk. Avalanche, again, trash coin. Now, this one's trying to carve out what looks like a double bottom. Obviously, our fib level, the 0.5 right here, will be resistance. If we broke through that, we likely get a retest of the 382 up to $32. Again, building up momentum, but still looks absolutely horrendous. So we'll see what happens. In my opinion, right now, what's taking place is we basically have like 2 or 3 weeks, well, probably 3 weeks roughly, of an opportunity for the stock market and crypto market to do something bullish and run as fast and as far as they can. Because at the end of the month, we're going to get that 75 or possibly 50 if we're lucky, not really if we're lucky, if the markets are lucky, I guess. But we'll likely get that 75 basis point hike. And then at that point in time, it's going to be earnings season. We're going to be hearing all these revisions coming in. And then all of a sudden, these valuations are going to go from looking good because prices come down a ton to all of a sudden the earnings come down and now they look way overvalued once again. That's what I expect to happen. So that being said, these cryptos have an opportunity to run. If they can get back above their 821s, if they can take out their previous little, resistance levels right here, they can retest some of their key, breakdown Fibonacci's or moving averages. So maybe 59 on Solana seems unlikely. I'm surprised it's not at 0 yet. They probably just shut down the network every time somebody tries to sell to hold the price up. So if you try to sell, they just confiscate your coins. But they voted on it, so it's for the greater good. So Chainlink, again, hanging out at that key fib level. We talked about this potential for a move back up here. We'll see what happens. This one looks very, very weak. It can't even get above the 8. Most of the other cryptos are at least above the 8. Most are above the 21. And lots of them are looking like they're about to get the cross. Chainlink looks very, very weak. Basic attention token was one that we specifically said looks much stronger than the rest. It has already crossed 821 back to the upside. It already retested the key fib level. It maintains support right here and has actually broken above that fib level. So as long as it's above the 0.5 now and it has broken through essentially that neckline resistance, it seems likely it's going to get a reversion of the mean play retest of the 200 exponential, possibly 200 simple, or the 382 at 63 cents. So again, this looks like probably one of the better charts, or definitely one of the better charts right now. Algo looks pathetic, nothing happening, just going sideways. This looks like Chainlink, very, very pathetic and weak. XMR, Monero, trying to retest the 21 at least. This one looks a lot like Ethereum looks right now, trying to build up some momentum, just kind of hanging on at that resistance, at that moving average. If it starts to get above this level, there's some potential probably for the Heartline retest and the previous resistance, support rather, as resistance. Around 137 maybe, which is still a decent little move up here. Another 10% to the upside. ADA, complete trash, garbage. The worst. One of the worst cryptos. Can't even get above the 8. This cult is dying. The only reason it's staying strong right now is because it's a cult. and everybody's just culty and just hanging on. But there's no new cult members, and slowly but surely the Kool-Aid is kicking in, and the cult members are dropping dead. So unless they start pulling like some full-on Jehovah's Witness stuff and like going door to door, this thing is about to melt down. It looks absolutely horrendous. KNC, Kyber Network. So trying to carve out a little double bottom right here. We obviously have a resistance level neckline right here, about $1.56. If we get up to that, get back above it, the 821 will have crossed the upside, and then it looks like we'll probably be able to jump from the 618 back to the 0.5. So $2 if it can get above $1.55 for long enough. Arguably, you could enter the long position that we discussed right here. I mean, you couldn't. Obviously, I could, because none of this is for you. I'm just showing you what I possibly will be doing, but probably not on this specific one. 21% downside if we break below 786. Entry right here with the target back to retest to 200 exponential or simple. Could easily underperform to the 0.5, but realistically, it's a 3-to-1 risk-reward ratio. This thing is clearly like as pumpy and dumpy as it gets. So we're at key support levels, horizontals, and descending support of the channel. So does it play out? I mean, probably not. It probably breaks down and goes to zero immediately overnight and collapses like a Ponzi scheme. Or it can move to the upside 66%. But, I mean, if I had to guess, most of these cryptos probably just collapse to zero tomorrow or the day after. Maybe 2 weeks. Ask Peter Schiff. I heard his bank just collapsed. Oh, that's not even funny. I'm sorry, Peter. Sorry about your luck, Grant. So if you bet on Peter Schiff or you bet on Bitcoin, technically Bitcoin won because Peter Schiff's bank went to zero and Bitcoin still exists. So, oh, sorry, Peter. Oh man, that's a low blow too because gold just broke down as well. I'm sorry, Peter. Sorry about your luck, bro. Maybe hire like an actual technical analyst. That might help. So waves. Just hanging out at that level. We talked about this potential trade setup and then like the real one that we'd be potentially looking at. I mean, it is technically above, this resistance going sideways. Can't get above the 8, which is not good right now. It's using up a lot of energy to just go sideways. I mean, the risk reward is there though. 46% upside, 5% downside, let's just say 9-to-1 risk reward ratio. Just be from the 0.5 to the 382, and we're already part of the way there. So there's potential for it. We'll have to see. It's hard to get bullish on these cryptos when you know that whatever Bitcoin does, the cryptos are just going to do more of. So if Bitcoin goes up, sure, let's get bullish and look at all these bullish trade setups. If Bitcoin goes down, expect a full-on meltdown. Speaking of full-on meltdowns, I guess the 8-ball got lucky on gold as well. It's crazy. Who'd have thunk it? So gold, absolutely melting down. Why did that happen? Well, we lost those levels that we talked about. We had the ascending blue support line. We had the ascending green support line. We had the descending red resistance line, or I guess pink. We lost it. We lost the 200 exponential or simple. They are now bearish. We're back inside of a bear market. We lost those levels. We melted down to the previous Fibonacci level. And, please don't get in the habit of doing things that I occasionally show on here. But just for hypothetical reasons, I superimposed the price action from back here on the monthly to like right here to see what the like meltdown would look like roughly if we got a similar situation, and it was like 1185. Now I don't think we go down to 1185. I think we probably find really, really strong support at like 1360. Obviously that was when I was extremely bullish on gold, was at 1360 when we were breaking this long-term resistance right here, and capitalized obviously. So I don't think we go back below that. It's possible, but hypothetically, if we got a similar situation like that, which it looks a lot alike, this could be real bad. And we talked about this potential of the cup and handle right here, and to tell you the truth, it's not going to happen. There's no possibility, because part of the rules for a cup and handle is when you have the like cup form and then we go into the descending channel, the handle cannot come down more than like, you don't want to see it. 50% is the best case scenario. Well, 382 is best case scenario. 50% is like, okay, it can still go bullish. If we come down to the 618, it looks nasty. If we go below that, it's like, okay, we're just revisiting the lows. So, and then obviously this Fibonacci is drawn from top to bottom, not bottom to top. So just reverse the numbers over here. So that being said, well, I mean, at this point in time, it doesn't matter because we have lost that level. So we don't need the internal retracement anymore. So we can just put the correct fib from the bottom to the top. And, you know, once we lose that 786, game over, which we already did. We closed below it. So that being said, I mean, it looks bad. Gold looks bad now. That is like the last thing that we wanted to see. But fully expected, obviously. So the next thing to do is come back down here and triple bottom. So we like double bottom right here, or like had a bottom, then another bottom, or we double bottom, then had a double bottom on the double bottom. So now maybe we have triple bottom on the bottom of the double bottom. But if we lose that level, it's danger. 1678. So if we go below 1675, it's about to be a shit show in gold. Now, we are still operating inside this channel. We have 2 clear touches here, and then a couple clear touches here. We have clear touch here, clear touch here. And, you know, obviously we're still inside that channel. So it seems like very likely that we would, over the next couple of days, melt down, hit the bottom of the channel, and this, you know, sideways channel and the descending channel. And that would be a very, very strong support level, at least temporarily. So now, while I would never obviously speculate on physical metals, because you can't win because you pay too much money, you know, over spot, obviously. And then, you know, you lose that, you give that markup back when you sell it. Digitally, you know, you can speculate on gold and silver for, you know, essentially free or very, very cheap. So there's definitely an opportunity to speculate on a bounce or a buying opportunity. If you think that's going to be the bottom and go straight to the moon, definitely could be a buying opportunity, like, you know, another $80 lower. And I mean, let's be real. If you like gold at 2000, which somebody did, people were buying this up. I mean, you love it at 1750, right? And it's even better at 1679. So, but this thing is literally flirting with danger. So we talked about this. Obviously, we broke down. This was, I mean, look, no surprise here. We did exactly what we were talking about with the 821 cross and just the complete meltdown. So here we are melting down, and it looks like we come down to that 75 level and retest the 200 exponential, depending on how long it takes to get there, 200 simple as well. We're in the bearish control zone. That was the buying opportunity right here. So we'll see what happens. We will see what happens. You know, this is going to look like just a big sideways trading range, but we got to be real careful because this looks so much like what happened in 2011, 2012 before we just melted down. And that's what that was that I superimposed on here, is basically just what took place during this. You know, this just meltdown right here. So we don't want to participate in that because we know that it takes 10 years to get back to even if something like that plays out. So not the time. Not the time for gold. And then speaking of trash, I mean, we talked about silver hitting the teens a long time ago. We talked about the measure move breakdown. We talked about the breakdown, the retest, the continuation. And here it is happening in real time. The silverbacks are being hunted into extinction. You know, sorry about your luck. The whales, the market makers, you know, the poachers. We're out here just collecting gorilla skulls. Okay, so, you know, you can join the party or you can be one of the skulls. But it's terrible. It's absolutely horrible. You know, we basically came back up, retested key fib level, distribution taking place. Everybody else was saying accumulation, and then obviously meltdown. You know, the next real target is like 1750 is what we're looking at. And the silver chart has been telling us the truth. The gold chart has been lying to us a little bit, okay, telling us what we want to hear. The silver chart's telling us the truth. The 200 simple crossed above the 200 exponential back here. So the trend was weakening from 2018, and now we have a lower high. We have distribution or redistribution, and now we're coming back down to retest the monthly moving averages. We already retested 200 simple on the monthly. 200 exponential on the monthly is like $18.15, confirming into a bear market. And just like with gold, we lost the moving average, came back up, retested it, got rejected, the slope line, came back up, got rejected, and melted down. Got to be real careful. The same thing's not happening again. So, you know, I mean, been warning everybody about this for a while now. So hopefully there's no victims. Not on this channel anyway. Or maybe some victims will find us and then decide to learn instead of going on forums and Reddit groups. I mean, let's be real. If your like main like channel or group or whatever is, you know, a cartoon character, Wall Street Bets probably not a great investor. Let's be real. Now, can a bunch of idiots get together and squeeze something? Sure, they definitely can. And what does it take? Well, if the Fed pumps out another $10 trillion, I also will join a Wall Street Bets forum, and, you know, we can participate in ridiculous squeezes together. But until they pump out 10 trillion, I'll probably just assume that probably not going to happen again. So gold silver ratio obviously told us what was happening. We've been talking about it for months here. This confirming into a bull market tells us that gold is going to gain strength compared to silver. When does that happen? It happens at the downtrends, when we're going into a downtrend. Gold goes down, silver goes down much faster. Obviously, this chart was telling us what was happening here. We have now hit my level. So my target was 90. We hit 90. So does that mean that's it and we're going down from here? No, we could very, very easily go up to the 618, which is at 97, and that's in silvers to gold. So right now it takes 90 silvers to buy one gold. We could easily get up to 100. We could easily go to new all-time highs, you know, over 130. I don't know what's going to happen, but my macro view, if we're going to stay somehow bullish on silver, my macro view is that we get a situation like this where we peaked out, we come down, we put in a lower high at the 0.5 that previous time from the high to the low, 50% retrace, and then we go much lower, and that was the 3.618 fib extension. So, you know, obviously diminishing returns as dollar values get higher or numbers get higher. So, you know, maybe we get the 2.618 fib extension move. I mean, I don't know what's going to happen, but theoretically, this could be playing out right now where we're basically getting that 50% retrace, maybe a 618 retrace, come up to like that 97, and then we start to break back down. If we lose this support right here, you know, maybe we can come back down to like 40 silvers to one gold, and it could be a phenomenal opportunity. But again, there's a lot of ifs and a lot of things that have to happen before that takes place. So in the meantime, we can just wait for those things to happen and pay attention, you know, and then if they start playing out, that's fine. We can take advantage of it. But I'm not going to just sit here and say, oh, I think next silver will be at 40 to 1, so I can double my gold silver positions. No, thank you. I'll wait for some signs from the market. So platinum backed by popular demand, XPT melting down. So we're down here at the bottom of the channel again. We're at our target. So I mean, we could go slightly lower here. This has obviously been in place for literally months. Could it be adjusted slightly? Yeah, something probably like that. Looks pretty good. So we obviously have like 3 touches on the top right here. I think if we went by closes, maybe it should be a little lower. Yeah, that looks better. So it's like a close here, a wick here, a close here, and then a close here. So only 1 touch on the bottom. We're about to get the second. I would expect this to act as support. Maybe we get an overshoot and come down to that fib. But, you know, we're at 850 now, which was basically my target between 830 and 860. I think realistically, though, we probably get down to 8, maybe lower. But again, this thing has just been melting down. Now, it doesn't mean that this isn't actually going to be a bullish breakout eventually, but it could take a long time to get there. So, but it does look like there's some potential here. But this is by far the most underperforming metal of like the last like 15 years, maybe 10. So pot stocks trying to carve out some kind of bottom right here. We'll see what happens. I've already told you I've started actually taking on some positions at these levels, but I fully expect them to either go to zero or to be holding them for literally, you know, 3, 5, 10 years to come. So very, very small, very, very speculative positions. Take your winnings from, you know, something like gambling in crypto or, you know, whatever, and I put them into things that I'm like long-term bullish on. This is the most speculative, in my opinion. Matter of fact, I would consider myself a very conservative investor, trader, speculator, and pot stocks are very, 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 very speculative for me at this point in time, especially ACB. We talked about the fundamentals and broke down like the balance sheet and some of the issues there. Tilray, again, still very, very speculative, but a little less so. I did just recently take a position on Tilray and CGC as well. But again, I want to see this thing come to new lows. I really want to see it come to new lows. But when we started to carve out this little double bottom right here, took a little bite at it. We'll see what happens. Again, probably goes much, much lower. This is probably just a back test before we break down. If we get above, Tilray tends to overperform on the ways back up. We got a bunch of these awesome scalp, like quick moves on the way back up, including this was an amazing, awesome scalp right there. But the truth is, if we get above like 363 right here, we probably shoot straight up and retest the 786, which is where we top. But essentially, we're talking about, and again, it's still very, very soon to be like even getting excited about this. We're talking about another quick like 35% move up. And then all I'll do is I'll close the majority of my position. I'll keep some of the position open and just leave it, set it and forget it, because I'll be using the market's money. I will take all of my money back out of the market, and then I will leave a percentage of it open, 10 or 20% of the profits or whatever. And then I'll take another, 50% of the profits and, buy something in real life or speculate on something else, etc. But essentially, we're just building positions off of our successful scalps by just keeping small portions of that position open. But that being said, we could be looking at a decent little pop up here. If we close back above that 886, if this starts looking bullish. The real level is not just the 886 though. We want to take out this high right here, because then we have like a little W, double bottom. And the actual trade setup on this, assuming it like underperforms, we're talking about basically 16% downside, 33% upside. Not good. That's not what we want, obviously. To enter into the trade right now is much more risky than, from the 322 level, obviously. But that being said, the real play is if we get one of these overperformance plays and come back up and retest the 200 exponential is simple. So we could be getting 75% upside with essentially like 16% downside, like 4.5 to 1, or obviously, much lower if you got the same entry. Still looks very weak though. Pot stocks still look very, very weak. Trying to like get excited about some cryptos and some pot stocks, but the truth is they probably just all go to zero tomorrow, maybe later today, probably at least by the end of the week. But they did outlast Peter Schiff's bank, so that's good. So Hexo. So there's some crazy stuff on here. Some of the guys in the group were talking about pre-market or extended hours. It jumped up to like 40 cents. There is like in talks right now, basically one of two things is happening right now with Hexo. It's either about to go bankrupt or potentially going bankrupt, or it's getting bought out by Tilray for like 40 cents. So I suspect that there was probably some inside information, some kind of like deal going on, and it pumped up to that 40 cent mark because people were looking to like arb the difference. And then we just didn't see any like follow through or anything because it just sold right back off that level. Again, very, very speculative. Very, very speculative. And if one of these fails, it's probably this one. Matter of fact, I'm surprised they haven't done like a reverse split by now. Doesn't look great, but again, all these pot stocks, very speculative. Canopy Growth was the other one I took a small position in. Looking for at least potentially like gap fill back up to like 350. At this point in time, it's like $1, which is, 33% move up. A little more than that, actually. So we'll see what happens. Again, I fully expect these to go lower. We hit the 1.618. That was my target to the downside. So that's what I was paying attention to. Very possible we come lower down here to a new all-time low at like $1. It's definitely possible. But that was our 786 retrace and the 1.618 fib extension from the bottom to the top. So this is, I thought we had a box in here. I might have accidentally deleted it. But this has been the level we've been waiting for forever. I'm going to just put it over here to the side a little bit. That was the area we've basically been waiting for, the 1.618 to the 0.786 internal of its entire life cycle. Now, again, I would not be surprised at all if this goes to new all-time lows and trades under $1. Would not be surprised at all. So, we should be entering and, positioning accordingly, either with a stop loss or fully knowing that, there could be massive, massive drawdown. All right, Sundial is the last of the pot stocks we're looking at here. Again, this one's holding up much better in relation to its previous low from back in November 2020. It is at a key fib level, just hanging on to the 786. Looks okay, I guess. Still terrible, obviously, very much in a bear market. But it's holding on for now. If this thing gets back above like 40 cents, then we start looking at that like internal 618, the green 618, or the 200 exponential is simple, up to like 51. Not a great trade setup right here, at least not now. So But again, very, very speculative, and probably all these go much, much lower. So Cameco, CCJ. Okay, so we're getting the moves we've been talking about on uranium. It took us a little patience, obviously, but we sold on the triple bearish divergence from these three big peaks right here. So we took profits at nice levels up here, and we are down substantially from those levels. In many cases, like 33 to 50% on the uranium stocks. Cameco is obviously one of the better ones and holding up better. It has confirmed into a bear market now, and now we're seeing the rest of energy doing the same thing too. So if energy continues to suffer, if commodities continue to suffer, uranium being the most hated thing ever in all of existence, and then also, commodity / energy, I fully expect this to have a brutal sell-off. But I'm still very, very bullish on it long term. And I still have some positions permanently from much lower prices. But I'm looking to reload substantially when we get to key levels. So the next key level we're looking for is a 200 exponential on the weekly at about $17, $16.91. 200 simple about $15. But realistically, obviously we're confirming into a bull market on the weekly for the first time in literally decades. On the monthly now, we have basically confirmed back on top of the 200 exponential, hang on to the 200 simple temporarily, and that's where we're at now. Now the 200 simple is losing support right here. We're losing that. So it looks like there's a possibility we actually break down from here and retest the 200 exponential. If we get back down to like $15.80, I'm really looking to load back up on this, assuming we at least bounce it back to the 200 simple, and then we could get rejected. We could go higher. We could chop around for a year. I don't know what's going to happen, but this is a key entry for at least a nice scalp position, 35% off of the 200 exponential, assuming we lose this 200 simple and continue to go down. We don't want to get too greedy on this, but it's looking very, very toppy on our daily, weekly, and now the monthly as well. So great trade, beautiful, very profitable. Probably the energy trade was, probably like one of the best trades for the last like year and a half at this point in time. But very, very tired, and I fully expect much lower prices. So URA, I'm not going to go into a super deep dive on all these. We know we're at the initial target, the 382. We finally got down here. We basically touched the 382 perfectly. We have this key support at that level. And, again, we talked about how these are looking very toppy. This looks like a macro, like a 5-wave structure playing out. That's going to be the macro 1. And we're looking for the 2 to come back down here lower. And then also what we're seeing is from this key level, we essentially have what looks to me like, again, at least a short to midterm topping pattern. So if we come to the 3, down to the 4, up to the 5, and then back down here, and then back up to here, it sort of looks like we're kind of, carving out a little head and shoulders topping pattern. Now we have this horizontal that is, pretty solid support at the 382. Obviously, most everybody's going to see that. Anybody that fibs from the bottom to the top is going to see that 382 as support. Anybody that's looking for potential topping patterns is going to see something like this head and shoulders. So then we can look at measure moves, breakdowns. We can look at the next key fib level. We can look at our macro fibs in yellow, etc. But somewhere around here is where I'm really going to get excited about URA, which is somewhere around like that high 13s to like the low 15s or high 14s. So slightly lower than where we're at right now. But yeah, I would expect this to hold that support temporarily at least. But again, we just got the reversion of the mean confirmed into the bear market. So, we don't want to just all of a sudden be like, well, I'm going to buy the dip now because uranium's been holding up pretty good. It's like right up until it doesn't. UEC breaking down below 200 exponential is simple. Again, confirming into a bear market. We have some targets to the downside here. We'll have to see. We have this ascending support here in yellow. We lost our long-term ascending support in green. It wasn't beautiful, but it was clear as we have bounced it like the third time here and then put in the lower high, broke back up, couldn't reclaim it as support, found resistance at the 200 exponential is simple, and now we're down at the yellow support. So if we lose this one, we really have to start looking at, basically the top of the triple bearish divergence channel. We have to start looking at that as like our potential measured move down. So this one looks obviously a little more like just a double top basically, with that same kind of like support as opposed to like a head and shoulders. But we know if we do get a breakdown, this could get real nasty. I don't think it goes back to $1. It's possible. you know, probably somewhere around like $1.50 or $2 is where I get really excited about reloading on UEC. And then UROY, we had a nice little scalp right here. This is why it was so important to just take profits and get the hell out. This thing has been getting absolutely wrecked in comparison to uranium, underperforming to the upside and overperforming to the downside, aka the dumpiest of the dumpy for uranium. Which is actually counter. If you ask me like to write down like the correlation between what's taking place and would a royalty company do better or like a you know, mining company, I would have told you like the royalty company would do better because we're seeing inflation in wages and costs and everything, and the royalty company just gets, you know, paid out. But you know what? It's not always the case. So I would have been wrong on that. But fortunately, nobody asked me about that, so I don't have to be wrong. So that being said, we lost key level. Obviously, that fib level was huge. So breakdown below that 382 likely takes us to the 0.5. We are still operating inside this channel. We have multiple touches on the top. We have only one wick on the bottom. Arguably, if it wasn't for the heart line, I would say we could do something like that. And honestly, that almost looks better because we found support right there. So I think realistically, there's people watching that, and then there's people watching for something like that. So I think it's important to have both of them. So technically, we're at support right now. So I wouldn't be surprised to see a little bounce up here. We could very easily wick down, you know, lower depending on where it is, somewhere around like that $2 range. But realistically, we're looking for a buy off the 0.5. So this thing can kind of grind around, go up, go back down. But we're looking to get it at about $1.80. It could go much, much lower though. So, you know, we don't want to get too greedy at $1.80 when it goes to 140. You can be like wishing you saved some dry powder. So, all right. And then the last of our uraniums is the quadruple UPL. So again, confirming it to the bear market, looking like it's gonna melt down here. Realistically, 382 is our target. We have some pretty clear support around this level. Looks like $4, 407. And then the 0.5 lines up with our macro fib, and that's the real juicy target. That's really what we're looking for at 305. I'm surprised I don't have a box right there. Oh, duh, because I have a trade set up right there. That makes sense. So yeah, that's our target, is basically that 0.5 and that macro fib 236. So that could look real juicy, and we have massive upside target with that. Hence the giant greenness. Super green. All right, so wheat futures. So we talked about this and oil and compared it exactly, and then talked about how the next move after the breakdown was essentially to the 200 exponential retest of the bottom, and then oil literally did the exact same thing we said like 2 days later. So obviously that was a good comparison. If you didn't watch that and you're like, what is he talking about? Go watch it and then be like, oh shit, that played out real nicely. Yes, it did. Since then, of course, wheat has continued to melt down. No surprise at all. So it's at 817 now. We talked about some potential key levels. Obviously, I honestly expected some kind of support right there. That's crazy that it broke down that aggressively. And then we broke through that ascending blue. That's like the worst color to pick because it's like right where the 200 exponential and simple are at. So we'll make that white. We have pretty clear ascending support line right here. We have lost that support. We're kind of still hanging on to it. I would consider it still be valid for now. We're below the 200 exponential and simple. We're below that Fibonacci. So if we cannot reclaim above like 838, likely just break down to the next key fib, which is 725. And then we talked about these, you know what, that's another one we could talk about too, is like the parabolic support lines. But essentially we have this next parabolic support here in green, and when we lose one support, you know, we basically start like the trend starts getting more and more parabolic, and then we go straight up, and then we usually have a double top lower high, and then we break down from support and retest the parabolic trend line we broke away from. And then if we lose that parabolic trend line, we come down and retest the next one. So, you know, that would be the green one right here. So it's still a little ways away for now, but it wouldn't be crazy to think we come down here to 627. You know, and then obviously, typically what happens is you break down from one, you retest that previous one, you come down, or I'm sorry, you break down, retest it, come down to the next one, pathetic underperformance, break down from that one, retest it, come down to the next one, and then, you know, we just continue until eventually we start finding some support again and then moving back to the upside. Now, when is that going to happen? I don't know. How can this possibly be? Because the narrative is there's going to be no wheat and everyone's going to starve. And I don't know. Maybe the war is about to end. Maybe there's a secret stash of wheat. Maybe the government is just going to, you know, make protein powder out of bugs, and we're not going to need wheat anymore. You know, I honestly don't know. Maybe they have an alien super ray that they can shoot at grass, and then the grass turns to wheat, and then they can harvest the wheat. I really don't know. Some of those seem more viable than others. You know, I'm not going to try to predict what the news article will say, but the charts obviously predict what the news articles will say one way or the other. So lumber futures, obviously we came all the way back down, very, very deep on that retracement after putting in a lower high. So at this point in time, we're basically just inside a triangle. We talked about we were at the bottom of the triangle. Seems likely we get a retest back up to 200 exponential simple, possibly the internal yellow 618 back to the top of the range. So I could see wheat back up at $1,000. It's at 600 now. It's picking up some momentum. It is using an awful lot of energy right now, though, so it probably underperforms. Seems actually like really likely it probably just comes to like 770 to maybe like 830 and then gets rejected and goes lower. I mean, this thing is insane volatile. And if the housing market cools down and everything, I mean, lumber's probably going to be cooling down as well. All right, Altria. So yeah, obviously this has been a no-go. You know, this was a really weird situation that played out in real time amazingly well. We've been talking about Altria for a while and looking for a potential opportunity to buy off of support. And then all of a sudden everybody was talking about it. We were talking about like back through like this region for a potential entry into this going into like recession. And then literally everybody, I cannot even tell you, suddenly I heard everybody talking about Altria, like every possible area you could imagine, like they would be talking about any kind of stocks or investments or anything was immediately talking about Altria. And it got like a funny feeling like, wait a minute, is this like energy? Is this going to be another one of those uranium situations where all of a sudden everybody's talking about it and then it capitulates like crypto or something like that? And then literally it capitulates down and then they're like, oh, the jewel's illegal now and blah, blah, blah. So somebody must have like amped up the whole investing community and got them excited about this, fully knowing this was going to happen. I mean, I don't know if it's conspiracy theory. I don't know what the deal is, but I mean, that was just awfully convenient. I can only imagine if we would have been like, yep, we're buying right here. And then it just melted down. Because that's what a lot of people were doing. A lot of people were talking about buying this. And in the last few days, down 24%. So it was obviously a no-go for us once we lost this blue support right here. We're no longer interested in it, as well as the fibs. And then the macro event was taking out this 42.57. So now at this point in time, we're back testing it as resistance. And it looks like it goes lower. So next downside, 38.53. And then realistically, if we lose 36, I mean, I fully just might as well just go put in new lows. And then after that, shit, might as well go to $10 or something crazy. Might as well just SPAC it up and go to $5. Obviously, Ultra is not a SPAC, but, you know, that's what they do. They go back to 10 and then to 5 shortly after. And then usually, like, nowhere after that, but down. So, yeah, dodge a bullet on that one. Man, glad I didn't put up any trade setups for Altria because I would look like a retard. KHC, I am due for a loss here sometime, but I mean, let's be real. It's going to be a small one because that's the plan. KHC, Kraft Heinz Company. You know what? It is like reclaiming that level. I mean, it looks sketchy right here, but we have the cluster, the 200 exponential and simple. We have that ascending blue support right here, and it's hanging on. It's hanging on. Now, the problem is it's using all its energy to hang on. So eventually, it's going to be exhausted, sweaty, holding on to, you know, the edge of the cliff, and then it's going to run out of energy and fall. In my opinion, that's what seems likely. So we know, obviously, the key levels to watch are the previous swing lows. So we have one at like $35. We don't want to take that one out. But by the time we hit any of those, it's going to be very clear what's happening. So 34 right here, 32 right here. It looks like it's about to break down from this pattern. And then, you know, we really get interested in this around like 29. So that's what we're looking for. We have this potential setup right here. Maybe this plays out too. But the fact of the matter is, I don't like this price action. I would have to buy it back up above the 200 exponential, above the 200 simple, above the ascending support, and have some energy left. But I don't see that taking place. So we'll see though. Might miss out on this one, honestly, if it does pump to the upside. Cabot CBT hanging out at the 200 exponential and simple, likely goes lower. It looks like it wants to come down to 57 bucks. Obviously, that's our target. There's potential for a little further upside here, but it looks very weak. It lost to 8 and 21, couldn't get back above them. It's losing the 200 exponential, barely hanging on to 200 simple. I think it likely goes lower before it goes higher. HUSA doing just like we talked about. So, this is fine. We got the big pump, cools down. We got another lower high pump, cools back down. So playing out very nicely. We are obviously looking at on the macro. This is confirming into a bull trend, and we're talking about the potential to be able to get this at a much, much lower price. Let's go out to our monthly chart here, and this is what we were talking about for. I can't remember what this was off of. Obviously, I didn't take this trade, but I must have been talking about something. Obviously, the retest of 200 exponential is simple, but I don't know what area that would have had to hold that I was looking at. Maybe it was like I might have drawn this pre like one of these candles and said if it closed above that level. I honestly don't remember. I don't remember why this trade setup's here. I would have thought it'd be like the two. Oh, okay, maybe the 200s. Yeah, I don't know. I honestly don't know. And I could have bumped this and moved it. Yeah, just please obviously ignore that. Because we've been expecting the downside. And that's what it looks like happening. We're basically looking like we're going to come retest 200 exponential. When we get there, it's likely we double top and then we retest the 200 simple. We obviously had the bearish divergence on the weekly playing out very, very nicely as we discussed. Not only the knife did perfect, nailing the top, perfect, nailing the second top, and then also creating bearish divergence. Same with the TJD TDMACD. Beautiful job nailing the tops and the bearish divergence. So we want to see this level hold at 328, and then realistically 228 should be where we would be looking for an entry. I really don't know what the hell was going on with this. But realistically, it would either be take an entry at 322 or ideally take an entry off of the 200 simple at like 230, expecting further upside potential. But again, we'll have to see. Obviously, if energy continues to go down and this thing hasn't put in a new all-time high since like 2014, probably this thing is in for some serious pain as well. ENI. Please keep in mind all of these recent ones are like member requests. So I don't even know what half of these are, nor would I ever endorse anyone purchasing, speculating, or trading any of these things. That being said, ENI confirming into the bear market, breaking down. We talked about this potential for a retest of that 382 fib level. Obviously, we broke down from a 236, got rejected from it. So obviously, we're headed to the 382. After that, maybe we get a bounce back to retest the 236. But fully looks like it's about to go slinky theory and start putting in the stairs to the downside. So, but there's probably this scalp setup is pretty decent and it's probably going to play out. It's like a 3-to-1 risk reward ratio. But confirming into a bear market, 3-to-1 is like the minimum trade setup we want to take. I would be ready for it to underperform and probably just go lower. Man, these charts look so terrible right now. It's bad when we look at cryptos and they're like the best looking charts. Oh wait, no, there's still one good chart. Or no, two good charts. There's still two good charts in all of existence. The DXY and yields. That's it. And as long as they look good, everything else probably continues to look like shit. Newmont broke down from that key ascending support. So a lot of these have a long-term ascending support and are losing those supports. And that's very important because we saw what happened at Altria. As soon as it lost this support, it just completely melted down. And it's likely this melts down as well to the 200 exponential or simple weekly around like 45, 46. Losing the support, not good at all. Not good at all. We talked about this too. It needed to hold this support and then try to get back above the 200 exponential or simple to retest the highs. But we have triple bearish divergence. Took us all the way down to the bottom of the range. Potential that this is our break. So we don't want to get too bearish right now, but also a lot of warning signs when we see long-term bearish divergence. That's exactly what uranium showed us perfectly, picture perfect. Same with oil. Oil actually had a blow off top afterwards and then, came back down. Vale, V-A-L-E, again, we have that ascending support, holding on to it for now. Below the 200 exponential and simple, which is not good. But as far as long term, if it holds this level, it likely retests the highs at like 21, which is like a 50% move back up. If it breaks down, we got like probably like 0.5 around like $9. So it's at the breaking point right now. And there's a lot of stuff like that. You know, we're going to know where a lot of this stuff is headed in like a week or two from now. Mosaic Company. And then as we get towards earnings, as we get towards the Fed, meeting, I mean, I honestly feel like we're ready for a big leg down because the market is going to shit the bed as soon as we get another 75 basis point. Even if we get a 50, the market is already just begging, wishing, hoping, praying that there's no rate hike or 25, maybe a 50. But if we get another 75, I mean, the market is just not ready for it. And then when the earnings revisions come in and the misses, and the market's about to get nasty, real nasty. Valuations reset. It's going to look terrible when earnings comes in. I'm surprised there haven't been more revisions. I'm surprised that I mean, it's irresponsible as fuck that there haven't been. So Mosaic Company, MOS. So we talked about the 200 exponential and simple holding. Obviously, that is not the case. I would want nothing to do with this right now. It looked like it had some potential to bounce this area. If this was going to be a double bottom, it does not seem likely, obviously, at this point in time. So we're looking for that entry at the next fib level down, about $33 in our blue box over here. Looks likely. This thing's very close to confirming into a bear market. So even the stuff that has been doing okay, starting to look very weak. Excuse me. Matter of fact, let me get a drink really, really quick. All right, so, and I'll be in the comments in just a second too, guys. I'm just trying to push through these. DRV, Drexion Daily Real Estate, Bear 3X shares. Okay, so we talked about this. The hope and the prayer on this is that you get the massive like squeeze to the upside. I mean, it's still just hanging out. The longer, I mean, it's good that it's above the 200 exponential and the 200 simple. But the longer this goes sideways, the more likely this is to fail. I would be so ready to just exit this. We had that tiny little support kind of thing going on here. I don't know. It's been way too long already without this move playing out. I would be very, very cautious on this one. Palantir, confirming the 821 cross back to the upside. That's good. Building some momentum. It seems like it really wants to come up here and get like a $14 retest. I don't know if it's going to happen. There's a lot of like trash tech right now that's doing well. And at least like quick little pumps or whatever. When I say doing well, I mean they're down like 90%, but back up like 20. So only down like 82%. 51% move if it jumps up here. I mean, the trade setup's still okay for now. I mean, obviously you're in profit if you entered at that fib level, but I don't know. I'd be real careful with these super speculative companies. Sam, Boston Beer Company, revisiting the lows. Looks absolutely horrendous. I talked about if you were going to take an entry, it had to be off of that fib holding, and it's not holding. The 821 is not crossing to the upside. It does not look like it's coming up here for that reversion of the mean play. Matter of fact, it looks like it's headed down here to new lows. So, arguably, you could just get out now at break even. It looks terrible. It looks terrible. But who knows? Maybe it's just one day away from closing back above 318 and then it looks a little better. But I don't know. This is like the worst chart ever. Bud is pretty bad. Anheuser-Busch, slightly better for now. The 821 cross, at least. It's at least hanging out at the highs. Seems like it wants to push up here to like 56 or 58. I'm assuming most of these charts, you guys were looking at more of like a macro view. And honestly, the macro view is just not good. IGO, we talked about this potential of like another like kind of sloped head and shoulders pattern. Much, much, much less reliable because less people are going to see it. But still the same kind of mentality of like the high, then the lower high, then the breakdown below 200 exponential and simple, likely back test, and then measure move down. Seems likely this is headed back to like 7, maybe lower. Seems likely. holding that support for now, though, or at least kind of holding it. We got back up to hold it. So, I wouldn't rule out $11 from 10, but the downside, in my opinion, is much worse than the upside. Matter of fact, it looks like it probably does retest the 200 exponential as simple and goes to 10. But again, it's like a 10-15% trade. SQM 821 cross. Seems like it's coming down here, retest 200 exponential. It's simple, about 72, 73. Man, everything looks so bad. Do you guys just pick all the worst charts and then you're like, look at this one? I mean, not really, though. Actually, a lot of these look better than most stuff in the market. It's just crazy. Every chart we ever look at is bad. And I'm like, every once in a while, I just like get sad because I'm like, man, all these charts are terrible. They're so mean and red and pink. And then I just look at the dollar chart and I'm like, at least there's one good chart. Galaxy. I don't know. Probably going to pull a Voyager here pretty soon, I imagine, right? Go to 0. I mean, this was the retrace. I didn't think we were going to get here that quick, but, that's our macro. I don't know. Is this thing going to get real nasty? I mean, it's at the 0.5 with no bounce so far. I would think it would retest the 382 and then go lower. It might just skip a step and go straight to the 618. This is tough. I mean, these things look so horrendous. It probably just melts down. I wouldn't trust any of this junk. Look, the most important thing is we know if your chart looks like this, before you can get bullish, you need to bounce off a key horizontal typically, and you need to cross the 8 and 21 back to the upside. So if the 8 and 21 aren't green or close to flipping green or looking like they're about to flip green, I would not be trying to call like exact bottoms on things that are just melting down. Monkey League. I'm just going to look at this forever. I'm going to start titling streams Monkey League. I mean, it looks terrible, obviously. It's garbage. It had its little like attempt back up here to push. As long as it holds above the 21, it looks okay. They're across to the upside. It's obviously much better if it can close above like 10 cents. Obviously having some clear trouble based on the last like 4-day wicks in a row. But arguably, I mean, it is still, the 8 and 21 are still across to the upside. So, if you got out when the 821 crossed the downside, you got out at $2. So an entry at 10 cents doesn't look so bad. But seriously, though, I say this a lot, and I'm joking, but, I mean, this probably does go to 0. Like, very soon. Probably tomorrow. Or the next day. By the end of the week, though, for sure. If not, the month. There's no way it exists in 2023. Let's be real. EBR. So we're at that support. Obviously, we have a little pattern playing out here. We have 3 times on support, 2 times at resistance. The 8 and 21 across on the downside, 200 exponential slightly below us, basically at the 0.5. If this thing's going to bounce, I mean, this is it. But we were talking about this. The real trade is shorting the resistance, not buying the support. Now, arguably, there could be something here now that we're at support, for a move back up to the short. So you could ride it up 16% and then, ride it down 30. It's definitely a possibility. But it could just break down now. I would expect some strong support at like 750 though. And then obviously we have the 0.5 as well. But I mean, again, the real trade's probably to the downside on a lot of this stuff. And last but not least, we have LLAP, Terran Orbital Corporation. Okay, so this is obviously a SPAC. How do we know that? Well, it was $10 and then it dropped down, it pumped up, and then it completely melted down. So obviously a SPAC. So, I mean, no, I wouldn't touch this with a 10-foot pole ever. I literally would not tell my enemy to buy into any SPACs at this point in time. I mean, I don't know what this is. I don't know if they have a deal. I don't know anything about anything. But, I mean, let's be real. Everybody that ever got involved in this lost half their money already. So, I mean, they probably lose half their money again. And then probably after that, half their money again. And then probably it just goes straight to 0. And they don't make a deal. But I don't know. Maybe they have a deal and it's just really, really bad. But, I mean, it's trading in some kind of range. We have 3 touches on the top, 3 touches on the bottom. It's at the bottom of the range. Just know that if you're going to try to, like, trade something like this, that you have the highest probability of getting completely wiped out because, it's a SPAC. And obviously 99% of them are scams. It's basically just a way to skirt regulations. And, normally you're not allowed to say, like, targets or expectations or anything with like a normal public offering, but with a SPAC, you can basically just be like, this thing's going to a gazillion. We're fucking awesome, and we got the best team, and we're going to figure out a deal, and this shit's going to make you rich, and you could say whatever you want. So that's why SPACs are good, but also the worst. So yeah, I would be, no. But again, arguably, there is a trade setup here. So what is the trade setup? It's only fair that I show you, since this was a specific request. Essentially, this is what you're looking at. 10.5% downside. If we take out this ascending support, if we take out that previous swing on a daily close, you got to get the hell out of this thing. If you enter right here, your upside target is the top of the range, the previous high, basically, potentially 200 exponential and simple. 42% upside, 10.5% downside. Clearly in a bear market, 4-to-1 risk-reward ratio. So arguably, you could take it and you wouldn't be insane because it is over 3-to-1. So, all right, let's jump over in these comments. And then for the record too, I got such a great amount of feedback and positivity from the community about the static videos. I have another series of those videos coming. So expect the Wyckoff distribution and accumulation patterns. We'll talk about the psychology and everything. And then we're going to do some like other pattern videos as well. Just talking about like, random stuff, head and shoulders, flags, just various different things like that. So I appreciate each and everybody that tuned in today. Make sure to like and subscribe. Going to run through the comments and let's see what we got going on here. So, all right, what's going on, Toby? Welcome. What's your macro view on potential Fed pause before midterms? Not going to happen. The Fed does not care about midterms. They are, they are specifically not supposed to be political. So there's literally no chance of that happening, in my opinion. Not enough data will come out between now and then for them to justify a pause. So if they did pause, it's going to look like they're being political, and their job is to literally not be political, even though they are sometimes. But no, they will. You know what will happen though? They will hike 75 points at the end of this month. And if they're going to hike more than that, they will probably leak it out ahead of time. I think it's very unlikely we get 50 basis points, but possible. But I would 100% be counting on 75 basis point hike no matter what, unless there's some insane black swan event like nuclear war or something like that. Aliens visit. Geo Luke, hey all, so glad to be here. Hey, I'm glad you're here, brother. Thanks for your time. Crypto Trend Trader, appreciate it. Hey, I appreciate you, man. Thanks for the positivity. The Gigabyte says, hey, smiley face. What's up, Gigabyte? The Shin Chan 2, good to see you. He said, yo, Crypto Trend Trader, been a minute. Gotta leave in a bit. What's your opinion on weed stocks and the overall market, inflation, etc.? So I pretty much went through all of that already. Yeah, the weed stocks extremely speculative, probably all go to zero, but I am definitely speculating in that space. Inflation, we haven't seen enough data yet. They would tell us that it's going to peak, and then even after it does peak, we likely see a new high after that because things don't just usually peak out and then just go away. So I fully think inflation will continue to be an issue, and overall markets look like trash. We went through the 11 sectors, the main indices, and of those 11 sectors, 2 are at their 200 exponential and simple moving averages on the daily, and the rest are well below them, clearly in a bear market. So, roughly like 80+% of the market is bearish and below their 200 exponential and simple moving averages. So I'm very, very bearish on the markets. Mustafa says, what's up, Mustafa? Hello from the Netherlands. Appreciate all your work, brother. Hey, thanks, man. I've got a couple of people actually in the community from the Netherlands. So definitely glad to have you. Heard about you guys got a little crazy stuff going on over there at the moment, as does everybody, but definitely appreciate your appreciation. Yoda says, hello, everybody. Strong the forces with Crypto Trend Trader. That's right, Yoda. It's strong with this one, man. And I'm just glad to have all these awesome, Jedis and Padawans in the community. Megalodon's eating well. Yeah, exactly. Breaking through that ice, man. Just ready to feast. Yoda says, Polkadot, take a look. Can we? Buying, I am not, but scam project, it is not. Price action, pathetic, it's still. Laugh out loud, Peter Schiff. Yeah, poor Peter, man. Yeah, so we looked at Polkadot, didn't we? I think we did. Wasn't that on the list? Oh, maybe not. I thought that was on. Oh, has it really just been that long? Yeah, okay. We used to look at that one pretty regularly. Then it sort of went away. All right. And then Todd Schultz says, thank you. Yeah, thank you, brother. Always good to have you, man. Good to see you. Hopefully you're doing well. Calma Betty says, still bullish on 10K Bitcoin. Yeah, eventually. I mean, there's possibility we see a little more upside before. But really, the area I'm really looking for is 14K for now. Todd Schultz says, hey, just look at DGB on the daily. No, it depends on Bitcoin. Just saying, confirm. Yeah, we looked at Digibyte, didn't we? No? Did we? I can't remember. God, what? My gosh. I think I need to hold off on any requests further because TradingView's acting a fool because I didn't do my new update. God damn. How do these things update like every 15 minutes? It's a pain in my ass. Just looking for 25 to 33%. Yeah, I'm not sure, honestly, man. It won't let me pull up any more assets. I mean, granted, I have 432 windows open, but I have an update to my browser. And whenever my browser's not updated, TradingView like acts a complete fool and won't let me load anything up for some reason. Faraj says, great stream. Hey, appreciate it, man. But yeah, we're going to go ahead and wrap it up there, guys. Sorry I couldn't do those last couple of requests. In the future, if you're in the group, obviously you can request them ahead of time so I can just pull the chart up. But realistically, I just haven't like reset my computer all week and it's been waiting for a update. So, Calma Betty says, El Salvador President Nayib Bukele post asking Peter Schiff, how's your bank doing? That's so fucked, man. That's so fucked. El Salvador president, didn't he lose like hundreds of millions of dollars of like one of the poorest country in existence's money? And he's busting Peter Schiff's ass about the bank. That's hilarious. I love the trolls in the space. I mean, it's amazing. You gotta love finance. But it's like, I'm wrong and lost half my country's money that I invested in Bitcoin, but also you're wrong about gold and your bank went out of business. So like you're both like fucking horrible at whatever, economic speculation, whatever. I mean, but it's still funny though. Love the trolling for sure. Yoda says, the short clips I love. Thank you very much. Crypto Trend Trader, we can't forget the Polkadot chart. Much obliged. Oh, forget it. Yeah. I'll throw it on there next time. I used to look at Polkadot all the time, but then eventually all the cryptos just look the same. So yeah, we can go ahead and wrap it up there. Deserve a break, man. Yeah, for sure, man. I appreciate you guys. Thank you everybody for tuning in today. Obviously appreciate it as always. We do stream every single Sunday and Wednesday from 8 p.m. till 10 or 11. And then of course, every single Friday, we do the public members stream. So anyone is welcome, but fully appreciate that it is only made possible by the members of the community. If you are interested in becoming a member, you can obviously reach out to me. And obviously we'd be glad to have you. If you do, you get access to the TJD Master permanently, the Jewel Thief updated version as well. And then regardless, all of the other indicators are on TradingView for free, so you can always search them out. Highly recommend you check them out. There's some amazing stuff there, and all the rest are free. But that is it for today. It is 10:15 p.m. Eastern Standard Time on 7/6/2022. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And everybody have a great rest of the week. Keep in mind, too, we have earnings coming up. And then, obviously, the Fed meeting at the end of the month. And, it's going to put a lot of pressure on the markets. So any little moves we have in the next, week or two, just picture one of those giant, sand glass timers. And it's been flipped over and it's counting down. So, however much bullishness we can see in any of these various assets or classes or whatever, they've got a timer. So, they need to move soon. And a lot of them are spending an awful lot of energy just going sideways. So be very, very careful in these markets. But everybody have a wonderful evening. See you guys on Friday for the morning stream, 11 a.m. Eastern Standard Time. But that's a wrap. Crypto Trend Trader. Appreciate everybody tuning in today.